Good evening, my friends. Hey, man, good to see everybody. We got a packed house today, man. You guys ready to roll or what? Yeah, we got some new hats. That's right. Good, 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 good. Mindy, what's up? Brandon, what's up? John, how you doing? Mr. Greg, what's going on in Tennessee? Awesome. Guys, give us about 2 minutes. Let's get this party started, and then we're going to be good to go. All right, give 2 minutes for everybody to just get in here and get situated. As you know, with technology, you have like a subset of people that always have a little bit of trouble getting in. So let's make sure everybody gets in, and we're going to get this thing going. All right, all right. Hey, Kelly, I'm actually going to be in Orlando next week for some conference, so I will be getting a hold of you. Isan, you know I don't operate on your timelines. Never have, never will. John, how you doing? Roberto, hanging out from Italy. What's up, what's up? Roy, how you doing? All right, let's go and do what we do. Let's go and do what we do. Let's be great. So, guys, want to do this webinar, in terms of, I've learned a few things here in the last couple months. So, one of the things that I've been doing I did for some of my students when November and December was, I was trading a smaller account and really focusing on a couple different patterns to kind of show how to grow a smaller account, right? How do you make consistent money when you're brand new, right? Because that's the whole goal. I mean, sure, it's nice we see all these people online making $10,000, $20,000, $50,000, but I mean, whatever, right? Good for them. But in the general, why we get into trading is for a couple of reasons, right? Number one, we like it, we love it, but the other thing is just so we can have some income. Right? It's not always just like, oh, I got to make $50,000 in a day or $20,000 or even $2,000. We all got to start with how do we make a little bit of money? Right? How do we make just a little bit of money and grow our account and take it to the next level? Because frankly, the best way to go from making $20 a day to $200 a day to $2,000, you know what the easiest way to do that is? Have a lot bigger account. So we got to grow that account. And if you take the long-term view and you stick to a few specific strategies, what'll happen is if you make $100 here, $200 here, and start doing it, what do you have at the end of the month? You have a few $1,000s. And then you do it again, and you do it again, and then what do you have after a few months? You got some more money and your account gets bigger. Now you can take more size. Now you can take more risk. And now a lot of different doors open in terms of your trading. So today, I'm going to show you a few tips that I've been kind of working on in the last few months that I think will help you grow your accounts, but also go from, just how do I even make a little money, how do I make some money and do it consistently? And then how do we scale that bigger, right? What are the best trading setups to focus on in 2017, which is, of course, going to be huge because every year the markets are the same. Since I've been trading, the markets have always been the same. But one of the things that always changes every single market is kind of what are the hot plays? What are the hot setups? What's in flavor? 1 year it could be gold. 1 year it could be oil. 1 year it could be flag patterns. 1 year it could be shorts, right? 1 year it could be small caps, large caps. We had in 2015, it was like basically Amazon, Google, Netflix, and they traded like small caps. Every year there's small variations in terms of what's working. And then, of course, we've got to make sure that we're in those type of plays. Now, I got a special giveaway plan for you guys at the end of this. I'm going to pick, what's it, Eric, 5 people? We'll be picking at the end of the webinar, whoever's left, at the end of the webinar, whoever's left, we'll take 5 of you guys, and I'm going to do a special class for just the 5 of you guys where I'm going to go into some really, really specific techniques that, frankly, would take longer than just kind of a mass webinar. And, of course, I will be there to answer any and all questions. I will last you guys out. So as many questions you could ask me, I will guarantee you I will be standing and outlast you. So it's going to be an awesome thing. So I encourage you guys to stay to the end, come in that, because that's going to be a huge giveaway. That's way better than getting a couple T-shirts or some goofy hats, right? That's some one-on-one, well, 1-on-5 time. And during that class, we'll talk about whatever you need. Specific trading goals, a plan to put in action, and then, of course, I'm going to sit there, I'm going to let you bombard me with anything you got. Anything you got. So remember, you got to stick around to the end of the webinar to enter, okay? And then what we'll do, Eric, what are we doing? How are we picking them? We'll take a random number generator of a random draw of all the names, and I will make sure to email you guys and get you guys in there. Now, a little intro about me. I got tons of new people in here. We got a packed house. We had over 1,000 registrants, which is actually a first for me. It's pretty cool. I'm Kunal. I have been trading literally since I've been in college. Many of those beginning years unsuccessfully. Many like you guys. Now, that's half my life, by the way. I'm 35 years old. God forbid I feel like I'm 25 some days, and some days I feel like I'm 55. But I've been doing this for my whole adult life, okay? And so I have been through all the ups and downs of trading. I have been hot, and I have been cold, and I've been somewhere in the middle, and then I've been in the dumpster more times than I really care to explain. But from it all, I've gathered so many lessons and so much data on what works in the markets on any given time and what every phase of trader really needs to do to get over that hump. Now, we still got to go out and do it, right? And that's what I've had to do. And that's why I love teaching, and I love trading in front of my students. I'm on screen share, trading in front of you guys in the chat room all day, and it's awesome, right? Taking those lessons and putting in there. I still make mistakes, but it's been a great thing. I've got a wealth of knowledge to share with you guys. I love teaching. I have students. My man Ricardo is in the Netherlands. My man Henrik's in Finland. I've got like a dozen students in London, everywhere around the world. I speak all languages. Just kidding. But, guys, this is what I love to do. So, ask away as many questions you want. I will get to them at the end of the webinar. I promise. I have no timetable in terms of how many questions I'm going to answer. I'm going to make sure I try to get to every single one I can, but I'll do it at the end, okay? Remember, there's a lot of people, so guess what? If I don't get to your question, it's not that I don't see it. I'm just going in order, but I will get to it. So remember, guys, this is something that's a lifetime journey. And one of the reasons I think trading stocks is so important for every single person here is not just like the lifestyle of, hey, I'm a day trader, I can do what I want, I travel the world, blah, blah, blah. That's like a huge cliche, and there's like 5 people I know that do it. I'm one of them, right? And that's such a small part of where you are in your life. Trading is a job. It's no different than being a doctor, lawyer, accountant, janitor, whatever. You've got to go out and you got to learn this stuff. Then you got to go out and practice it. And then you got to go put it to use. And then when you put it to use, guess what? Just like in any job, you're not necessarily the best, right? You might not even be good. You might suck. But there's that path, right? Where somebody takes you under their wing to show you the ropes, and you get a little bit better, and then all of a sudden the student becomes the teacher. Now, I've got tons of students that have their own websites, they have their own classes, they trade and do all this stuff, and even help train some of our boot camp students. And it's been pretty cool to see over the years, you know, so many good students, Jake and Chris and TJ, you see them in the chat room, these young bucks talking in slang that I don't even know, but just amazing students all across the board, men, women, all over the place. And it's been, you know, a huge gift. But let's get into the nitty-gritty of how you start small. So let me tell you one of the things before we get into this on why I focus on trying to make a couple $100 a day. So in trading, the failure rate is high, okay? The failure rate is high. Nobody wants to hear that, but it is. But guess what? In the U.S., there are 400,000 small businesses opened every month. 400,000. Do they all succeed? No. Do they all have, are any of them guarantees? No. If you open a restaurant, what's your failure rate? Pretty high. You open a bar, what's your failure rate? It's pretty high. You open some startup with this hot technology. Well, we only hear of the ones that succeed, right? But what about the MySpaces and the other ones? There's thousands littered around that didn't make it. And trading is the same way, okay? There is a failure rate, but that failure rate is across all business, okay? That doesn't mean what? We don't just stop starting businesses in the U.S., right? Because there's a high failure rate. No. What's the common theme of what makes businesses fail? Lack of skills, lack of work ethic, lack of access to tools, mentors, capital. These are the things that businesses need, and these are the things that traders need. And when you have those and you can combine them, now all of a sudden something that's a high failure rate for the average person, well, guess what? You're not the average person. I'm not the average person. That's how I always look at it, is yes, there's failure in all businesses, but that doesn't mean we all just go and stop doing what we want to do and work for the government, right? We still got to go out and try. We got to still go out and follow our dreams. But one of the things that hurts traders, especially so many of my new traders, is this high expectations. You know, everybody, they assume they buy a class and they study for a few hours, and now all of a sudden they have the right to make thousands of dollars a day. But they haven't even learned how to make $1 a day, right? It doesn't just work like that. You take a class and you're like, oh man, I'm going to make a bunch of money. High expectations in terms of what you can make in the beginning is what kills people. Every day I have conversations with my students, some of the traders that trade for me, and I get the same answer from almost everybody when they're new. Man, I was up today. I was up $100, $200, but I saw this hot play and I wanted that $1,000 day. And I'm like, what do you mean? You have $2,000 in your account. You were working at a car wash 6 months ago. You were up $200. Who cares about the 1,000? Right? But everybody wants it. They want more. They want more before they've actually earned the right to go out and get more. And that can crush you. I've done the same thing in my career so many times where it was like, I'd be up money and I'm like, oh man, I should go out and have a lunch or go do this or do that. And I stay. And you know what happens by the end of the day? My greed kills me. My greed kills me, and I give back my profits. I give back my profits. And then what happens is we end up going through this huge cycle, because what happens is you're up a bunch of money, you want that 1,000. You don't want to lock in your 200. You want that 1,000, even though you have not earned the right, have the skills or the experience to even get there. Right? $1,000 a day, that's lawyer money. That's doctor money. Like, what gives you the right to get there so soon? Right? There's a process for everything. Okay? And so holding on to is key, and I've done that so many times in my life. We get We want to be traders for what? Freedom, to be able to do what we want. And so when we have money, guess what? Leave, go do something fun, because that's why you're in trading, right? To have some freedom, and come back and do it again the next day. Because when you give it back, now what happens is the next day, that's on your mind. I just gave it back. And so what? You're going to be up a couple $100 a day, but you're going to be like, well, I lost money yesterday, so I got to make up for that. And so then you give back that money. And what happens is you get in this slippery cycle that becomes very, very hard to break. And it all comes from the root of having overly high and unreasonable expectations of what you can do with your skill set, your experience, and your capital. Now remember, you know, $200 is just a mark I've thrown out. Some days are going to be bigger, some days are going to be smaller, but you always have to have the discipline to lock in gains and walk away. You also have to have the knowledge to identify trades, the experience to execute them, and of course the self-control to not come back in. I have a couple students right now that are pretty good traders. They know how to make money, and I literally go in their account. They trade for me in my fund. I literally, when they're up, I have to literally go in there and shut their platform down manually, so they can't even log in, because every time they go and take a break, they get cold because they've been out and about, so now they lost their focus. They come back, they want to trade, and they lose it all. And that happens all the time. That self-control to walk away when you're supposed to go away, that's huge, right? That's what makes a trader, is the ability to actually get your fingers to do what they're supposed to do. It seems so easy, right? Yet it's kind of hard. But it doesn't have to be hard, right? Just always remember in the back of your mind, you've got to think about this. You know, I had that making a couple $100 a day when you're new, it's pretty good money. It's not epic money, of course, but it sure beats having to grind it out at some other job, and you'd probably be doing this while you're at a job. It's not bad because you only have to do it a handful of hours a day. Nobody has to trade all day. And then what happens is when you can consistently make a little bit of money, $100, $200, just consistently make a little bit, you can scale it up pretty easy. The easiest thing for me to do as a teacher is show a guy who knows how to make $100 and turn it into 1,000. The hardest thing is to show somebody that always loses and gives it back and show them how to make $1, right, when they get into that cycle. But scaling up is easy because scaling up is just a matter of a few things. You know, it doesn't really have to be that complicated. So a few steps to get into this, right? Number one, we want to master a handful of strategies, 1 or 2. For me, small account trading and making a little bit of money, I like to have one good swing setup that I use and one killer day trading setup that I know I can bang out every day. Then I've got to develop the discipline, right, to wait for my pattern, to wait for that right moment, and most importantly, when to walk away. You know, I learned this from one of my mentor many years ago. You know, at that time, the advent of hedge funds and computers and all this stuff was coming around. And I was like, man, how do we compete? We're like regular people. How do we compete against the computers, the MBAs, the hedge funds, the algos? How do we compete against that? They're better, smarter, and more well-capitalized than us. Where's our avenue where we have an advantage? Well, our avenue where we have an advantage against all those type of people as retail traders, our biggest advantage is we can be opportunistic. We don't have to be in the market all day, every day. We don't even have to be in the market all week. If you're in a mutual fund in your prospectus, you basically have to be invested pretty much all the time. You may keep 5% cash on the books or something like that. Funds, everybody's like that. they've got to be in the market. They've got tons of capital to move around. For us, we only need a couple good trades, even in a week. We can sit there and stock opportunities that are high reward and low risk. And that's our advantage, is that we can be snipers, that we don't have to be in the market all day, every day. We just have to be in the market when we see the one or two things that we are trying to get done, and when they look exactly the way they need to. Number 3, scaling out of winners. This is probably the hardest thing, I think, for new traders, and even veteran traders like myself, is that ability where you draw a line on a chart and you think you have it, and then you sell it too early, right? You sell it too early. I've had this numerous times in my career. We were in the stock just yesterday, and we were in the stock yesterday. You can see this monster run. This is a stock called CLVS, and you can see this like huge run, right? Flag pattern, flag pattern, flag pattern, and I ended up selling my shares like right here, and I still left $2 whole on the table. You can never get it just perfectly, but the ability to ride out the winners and take a little bit of gain and turn it into something big is what can build accounts, right? We call them account builders. When you see the characteristics of what a home run trade could be, we actually are in it, and then we have the ability to ride it out. Because if you end up taking just $100 when you have the big winner, it doesn't cover the days you have losses, right? Because you're not going to just make $200 flat every day. There are going to be days you lose. So the days you win, when you have the runners, you have to really be able to ride these things out. And that's hard, right? That's really hard, because in my mind, and probably in all your minds, right, when we see money, we want to take it, right? We're trained to take it, right? We consider money valuable. And so if it's on the table, what do we have to do? We're thinking like, I got to take it. But that's not always the right move, right? We have to let our stocks give us a reason to sell it out. We have to give it a reason to sell it out, because if you consistently turn your $1,000 trades into $100 trades or $80 trades, how are you ever going to start building? And this is kind of, this can be some of the biggest things. I got a student of mine, he's in here, Henrik. He trades with me in our fund. He rocked 200 shares of this thing yesterday. He has a $2,000 account. He rocked 200 shares of this thing, riding this thing up. So 200 shares, $70, $60 stock is what? $12,000 probably in capital, right? $12,000 in capital, and he was able to actually go and ride this thing up rather than, hey, this thing just dipped down, so let me sell it, right? He's adding more as it goes so that he can actually get what he's supposed to do. The ability to ride up winners is what's going to keep you above what everybody else does. And then, of course, keeping losers tight. Foul 2, never. Number 4, simulate and practice, right? So just because you read a book, take a class, doesn't mean you're going to actually be able to go out and do it, right? So we've got to get practice. We've got to get practice. It takes thousands of repetitions to actually get good at a specific pattern. So I'm going to teach you a couple patterns. Now, just because you know the patterns doesn't actually mean you're going to know how to do it. Because in trading, every single day is a little bit different. Every single market is a little bit different. So there's an infinite number of computations and permutations that we can see in a given day. They all will look a little bit different. So when we can go out and simulate and really see hundreds upon hundreds of variations of this specific pattern, and we are practicing with deliberate focus, now we can build a database on our brains and, of course, on paper of what to do when we're seeing these. Because, for example, I'm going to show you a VWAP trade. I have 17 different variations of the VWAP trade. It would take me months to teach you every single one with all the variations. So when you have a few, you've got to go out and practice them. Then you've got to actually go out and take notes on them so that you can actually see, okay, when this happens, I do this. When this happens, I do this. This type of stock never does this. And now you're starting to build that database. And then, of course, I'm going to teach you a little bit about position sizing. This, I think, is a big thing. So traders in general, they just buy the same round lot of everything, depending on your account size. I have $5,000. I buy 200 shares of everything. I have X amount of money, I buy 300 shares, 1,000 shares, whatever. They just have a static thing. But what happens when you have a static position sizing is you end up with the same amount of shares and a low probability high risk trade as you would in a high probability low risk trade. You could actually have your home run trade sitting in front of you, but you're going to have the same amount of shares that you would in some junky trade. And that becomes really, really important. We want to be properly sized when the risk is low, and we want to have much, much less shares when we see something on a chart where we know that the risk is high. Now, I've got a position sizing calculator I'm going to show you. It's super easy to duplicate, but it's going to help you a lot because you need to be able to change. Sometimes you may have 1,000 shares. You may use margin. You may use buying power. And sometimes you may have 10% of your account in a trade, and there will be times you might actually be all in because you have this perfect scenario. So understanding proper position size is going to be one of the most important things you can do. If you put me next to a trader, a student of mine or any of you guys, and we traded the exact same entries and exits in every stock, and you traded a static 1,000 shares of everything, and I was allowed to move between 0 and 1,500, I would triple your returns, even though we have the exact entries and exits. Because when the opportunity shows itself, I would be able to properly size myself and then lower it when the opportunity is not as good. So remember, there's a bunch of different setups that we learn. Okay, a bunch of different setups we learn. So like for me, I trade all these different setups. Sympathy plays, flat top, base breakouts, flags, bear flags. I mean, I've got a million different setups that I like to use. Now I keep notes of pretty much everything, okay? But this is not going to be something that you can do in the beginning because it's information overload. It took me over a decade to get good at this many setups. And now that I have more capital, of course I'm trading different stuff. But in the beginning, to understand and be the master of one or two things is more important than being a generalist, being above average even in 5 or 6 things. You know, if you're going to be good, somewhat good at this and somewhat good at that and somewhat good at this, guess what? You're going to have trouble making money in the market because you're competing against people that are sharks, right? That are the best at what they do. So you need to be the best at 1 or 2 things so that you can compete, but also so that you can go out with mastery and get this done every single day. So there's some different setups that you can do. You know, I'm going to show you a few different things. So there's bounce plays, right? So there's bounce plays of stocks that are trending and they pull back to moving averages and they get oversold. So I use stochastics. So that can be one example of a type of setup. And I'm going to go into detail on a few of these in a hot second. There are intraday flags. So you have stocks that are breaking out on big volume, and they show a flag pattern intraday, which is frankly maybe one of the easier type of setups to identify, but I actually find them to be one of the harder setups to get consistent at because everybody's looking at them and they tend to fail a little bit. Quick pullback buy. So this is one of my favorite patterns for the open, where you have stocks that explode off the open, and you buy the first pullback to the VWAP with a stop under and ride it in. So you get that stock as it's coming in to some type of rest period. PR earnings breakout. So this would be when you are looking for stocks that have earnings or some type of PR, and they have a few characteristics that you're looking for, and then you're using a handful of intraday techniques to get in. Okay, so like a PR earnings breakout is something where a stock has earnings out, or maybe some news out, right? It's a biotech stock or whatever. So it's got some news out, and it's got a few specific characteristics in it. Chart breakout, float, volume. And now what happens is you're putting all these together to mold a story of what could be a big runner. So that's your daily idea. That's a PR earnings breakout. A stock is breaking out on earnings. Now, what you need to do when you have something like that is look intraday. You look intraday for a handful of specific patterns. So you have quick pullback buys. You have opening range breakouts, which is something I do every day, which is a breakout of an opening range, where a stock may gap up. It could gap up 100%. It doesn't even matter, 50%. But it goes sideways for 3 candles at the open. When it breaks range, you can buy that break of range and catch explosive moves, $3, $4, $5, $6 moves, if you have the right set of characteristics on its daily chart that suggest that the stock could move like that. Like Microsoft would not move like that, right? It's too old of a company and its float is too high. But a small cap biotech stock will have a very, very low float. Most likely it's a newer company. So the range that it moves is expanded. So when you see certain patterns, they can work on that type of stock, but they would not work on a Microsoft or a Cisco Systems or something like that that's an older, what we'd call a grandpa stock. I use 5-minute candles on all my trading. I use 5-minute candles on all my trading. Every blue moon I might use 1 minute at the open, but 5-minute candles are, I feel, the kind of the best bang for the buck, because you're able to get into stocks and catch bigger moves. When you trade off 1-minute candles, what happens is you see patterns everywhere. You see patterns everywhere. So like, for example, you know, like this stock CLVS, it had a big move at the open today, right? So what ends up happening is if you're trading 1-minute charts, see this is a 5-minute chart. So it opens at 71, it gets down to 71.44, moves to 75 in 30 minutes, right? And you don't even have a reason to sell this if you're on a 5-minute chart. But what happens if you're doing a 1-minute chart? Well, on a 1-minute chart, you end up seeing so many damn patterns. You know, flush comes down and it looks like it tanks, and like you see all this stuff happening. And what ends up happening with so many stocks is you just get like, you end up over trading. You see too many patterns. And so now you're in, out, when really what you need to be doing is buying and then hold until that moves over. So I try to stay away from 1-minute charts because frankly it makes me over trade. I don't know about you guys, everybody's a little bit different. My big problem as a trader has always been over trading. You know, I want to stay all day and make money. You know, I see it, everything flying around, and I just assume in my egotistical brain that all that money is mine, or it could be mine, and I want it all. And so I over trade, but I end up losing because you're taking too many trades. And so I like to use 5-minute charts because it keeps me away from myself. Scale out of winners, all right, and keep losers tight. So having a reason, scaling out of winners is probably one of the hardest things to do, but it becomes very, very important when you actually have a winner. And the reason is this, that in any given day, okay, in any given day, now I'll give you an example. This is, I've been fighting with this stock dust for like days, okay? For any given day, we take trades and we get stopped out for a small loss, or we have a gain and then it comes back the other way, right? Markets are choppy. Not every stock just trends all the time. Not every stock trends all the time. So what we need to be doing when the opportunity presents itself is actually be able to stay in these things. So like you can see, so I've been trying to short this stock dust forever, for the last 5 days. So dust is a setup that I use for shorts all the time. So you can see like this stock right here, it started at about $25. And it started coming up, and it's riding up and riding up. It's getting really overbought. So I use the stochastics to measure overbought levels. So stochastics 533 is the setting. So what stochastics do is it gives you readings on overbought, oversold. So when stocks get above 80 stochastics, that typically tells us that a stock is oversold and that there's a pullback coming. It won't help you time it to the day. Sometimes it will, but a really strong stock, sometimes it'll stay overbought for 3 or 4 days. So I had an idea that this dust would fail at this 200-day moving average. So this particular day, I'm trying to short this thing and it's not working, right? And then this particular day, I'm trying to short this thing and it's not necessarily working on a day trade basis. It's not working on a day trade basis. So I end up taking a handful of small losses on it. Let me extend out this chart real quick. Hold on 1 second. Settings. Hold on 1 sec. Let me show you back a couple days here. 10, 20. Hold on 1 sec. All right, there we go. Good. Good. So I'm trying to short this stock right here, right? The 200 SMA is basically at 41.25, okay? 41.25. So during this time, I know that the stock fades at about, it should be fading on its daily chart at around $41. So I keep shorting into all these spikes. And it'll pop down here, and then it'll just come right back up and all the way back up. You see this? Like pop down, come back up. 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 Because it's in the process of topping out. It's in the process of topping out. Now my entries on this are really good. My entries on this are really good because I know from the daily chart that we have a lid here at this 200 SMA, give or take. The stocks don't always stop right on the dot, right? They'll move around within that range. So I know it should be stalling out here. So I'm shorting into this spike and going for the big flush down. So I'm shorting into these spikes all the time. And I'll be up like, you know, it'll flush down. It'll flush down, but then it'll come all the way back up. And this is the reason that it's so important to take winners and keep your losers tight. Take your winners and keep grinding out the gains till the bigger trade emerges itself. Because see what happens is while I'm waiting for this, right, this huge dump all the way back down, there's an opportunity to make still my daily income. Because as I'm shorting into the spikes, right, it's coming down here $1, $2 every time. And this is where even I have to learn not to be greedy. Wait till the right moment avails itself, right? Wait till the right moment avails itself, and then you'll get the huge run. So what happened to me on this, and it's actually an amazing thing, I was up on this stock $1,000 every single day during these 3 days, waiting for the big flush. But at one point, I'd give it back because I kept going for the home run, So what would happen is I'd have this thing short, it'd come and flush all the way down, and these are big dumps, right? I'd have 400 shares, 300 shares, so nothing too crazy. And then what would happen is I wouldn't cover all my shares, and I'd keep a few for lotto, and then they come all the way back up. And I would give back over half my gains because I was being greedy, right? As somebody that's a day trader, we've got to be in the business of taking income, right? Of taking income till the big flush starts, okay? So what ends up happening is we get so greedy. We know that the big move is coming. But if we don't take our income trades, now all that happens is we burn our mental capital, okay? So there's financial capital and then there's mental capital, okay? Financial capital and mental capital. And I think your mental capital is even worth more than your financial capital, because if you tire yourself out and you keep fighting a stock and turning your gains into losses, you end up getting really, really tired. You end up getting tired, and then you're just out of the game. You're like, I give up on this thing. I'm moving on to the next one, and then it goes the way you want. Anybody ever like been looking at a stock, and then you're like, I'm done with this thing, and then it does what you think you're going to do? Happens all the time. And this is, this is something that, I know, but like I still fight with it. All these times, like I have $400,000, $500,000 gains in these flushes, and I'm not taking all of it, right? But we have to be in the business of saying like, hey, this is our job. This is our job. And so we need to be taking those gains, because think about this. At some point, the big flush is going to happen. But if you end up taking a million losses on it or not taking profit, by the time the big move happens, you're not even going to be in the game, or you're not going to take the big move. And so it's important to keep taking your gains, because you're building up your bankroll, but you're building up your mental capital so that when the opportunity actually avails itself, you're able to cash in for the big one. So I burned so much mental capital. Like I had this thing short in this pop here, and it came all the way down, and I covered half of mine, and then I let the other half come back. So this nice, which still should be a pretty home run trade, it's a 10% gain, right? It turned into a much smaller gain. Then I did it again the next day, and I did it again the next day. But all of these little trades, these $3, $4 trades, they add up to the same as this, right? They add up to the same as this. If I've been taking this, this, and this, what does it add up to? This. Now, that's like the hugest thing that, we've always got to be really mindful of. So what I'm doing here is fighting in this range, right? Fighting in this range. So while this stock is in range, I've just got to make sure I'm covering into the bottom of the range. This is a 5-minute chart, because at some point, you will break this range. And that's where having the mental capital is so huge, because that's what's going to get you into the account builder. So at some point, this thing did finally flush down, right? And thank God I was actually awake, because I was still taking some gains. I was able to capture it. So you can see, the more times you kind of test that range, the weaker it gets. And so then what happens is when you actually break down, you need to come in, right? And you can ride this thing all the way down for a much larger type of move. They come. You just got to be ready for them and watch those ranges. Now, on the other side of things, keeping your losers tight is a huge thing, because you can always get back in a stock, okay? Sometimes if you take a loss that's past your stop loss, then when you finally nail the trade, what'll happen is when you nail the trade, it doesn't even cover all the junk that you were doing before that, because you let your losses go back so far. So, I grade my students' trades. I grade my students' trade. They put them on a spreadsheet, and I grade them. And, I've got this mentorship group where I'm working with these students. And, so I'm going through all their trades, okay? I'm going through all their trades. And so, you know, I had a student of mine, I'm looking at his trades. And so, you know, when we're trading, you know, I'm calling out this CLVS. I'm saying, guys, check a look at this. It could be a, you know, a big runner, right? And so what ends up happening is, you know, when I'm talking to one of my students, he's got this thing on watch for a potential flag pattern here, right? He's got this thing on a watch for a potential flag pattern. And he's got like a $300 max loss on his account for a particular day, okay? $300. So he's got 400 shares in this stock, okay? 400 shares at 63 bucks. And it's a beautiful tight pattern, guys, right? Isn't it? Like you can see your patterns, when they're clean, they're crisp, you can see the levels. That's a great pattern. I want my patterns like my people, right? I want them to look clean. I want them to look crisp, right? You ever see a sloppy person? Can you trust them? No, they're probably a hipster, right? You can't even do that. You've got to go and look for the cleanest patterns. And so handling your stop loss in the right spot is huge, though. So he's in this thing at like kind of 63, and his stop is supposed to be right here at 62.80. So 20 cents, give or take, a stop loss on 400 shares. It's worth 80 bucks risk, max 100 bucks. So what ends up happening is this stock flushes down, and he doesn't honor his stop loss. He doesn't honor his stop loss at 62.80. So it's, and by the way, this happened in like a split second. He doesn't honor it at 62.80. And then at 62, he's down $400, right? And he's like, oh shit. And then it gets down to 61, and he finally gives up and says, oh fuck, this thing could go down all the way. So he stops out all the way at lows at 61.50. So he lost $1.50 on 400 shares, which is 650 bucks, 700 bucks. That's double what he's allowing himself for his daily max loss. So now what happens is, guess what? He has burned his mental capital. Instead of taking a $300 loss, he has taken a $700 fucking loss. Way more than he's supposed to allow himself. And so you know what happens immediately? The stock starts to rebound and it breaks out. It breaks out of his pattern. But now he's out of the game, right? He's out of the game, and he has the opportunity here for the home run trade at 63. This stock spikes to 66 in one candle, right? And 400 shares from 63 to 66, that's $1,000 potential gain for him. Instead, he takes a $700 loss when he should have taken an $80 loss. So having your stops at the right place, below those inflection points, is so key, because you can always get back in to the stop when it confirms. You can always get back into the stop because you don't want to burn your mental capital. So like, for example, he's trading a $2,500 account with me in my fund. And so I give him access to buying power. So, you know, he can have $30,000, $40,000 in buying power spread across a couple positions. But he's got to keep his risk really light. Otherwise, right, it becomes a huge inconvenience. It works as long as you keep your stop losses very tight. Because if he had just stayed, right, you're talking about $1,000 gain versus $1,000 loss, right? You get out and then you get back in when it breaks out. Now, $100 loss turns into $1,000 gain. So you always got to have that risk management. Our job as traders is to be risk managers. That's our number one job. Our job is to stay in the game and allow ourselves to be available for that big home run. Okay? I deal with this myself to this day. I deal with this stuff to my day where, man, I have this hot watch list and I think it's amazing. And guess what? I like keep just trading and trading and trading and forcing things at the open. And I get tired, and I did it today. I'm like, guys, I'm not feeling it today. And guess what? You leave. You're like, oh, I'm done. There's nothing going on. And then everything goes the way you want it to go. You've got to be able to save your mental capital. It's so much more important than even your financial capital. So when you have a winner, you don't want to be a wiener, right? So winners, how do you hold these things? How do you hold these things? So I'm a firm believer in scaling out, okay? Firm believer in scaling out. Meaning, I want to be selling in partial positions. Now, if you are day trading, okay, whether you're day trading, small account, big account, you should be on a per share commission, meaning you are getting charged only for the trades that, or the shares that you trade. So if you trade 100 shares, you're getting charged for those 100 shares. If you trade 1,000 shares, you're getting charged for those 1,000 shares. So if you're getting charged like $7, $8, $9, $10 a trade, mathematically, as a day trader, you're probably not going to be able to make good money because the commissions are going to eat up the account and you're not going to be able to scale out of your winners. Sometimes when I have a huge winner, I might sell 100 and 100 and 100 and 100 and 100. I might sell that thing 5, 6 times if I had to because I'm only getting charged for the shares I trade. So like if I sell 100 shares, it costs me 27 cents. Where if you were at Ameritrade, it would charge you $10. Okay? So that's a big difference, right? 27 cents to $10. Now, some people trade at other brokers where their trades are $5 or $6, but do the math, right? You do $5, $5, $5, and you have a smaller account. Even if you have a $50,000, $60,000 account, you add 5, 5, 5, and you do 5, 6 trades a day, and you scale out of them and you get in them, you've already spent a couple $100 a day in commissions. So it's a lot harder to make $200 a day if you're spending $200 a day on commissions. So you've got to go on a per share. The commissions will eat your account and you won't even know. So there's a lot of per share brokers out there. Interactive Brokers is a good one. There's so many of them. I have my own place where my students trade. Any broker you're at to, ask them, call them. I want per share. And remember this, that the cost of acquisition of a new member, right, for Ameritrade, E-Trade, wherever you want to trade, it's huge. Think about their marketing costs and all this stuff. And you're day trading. That's the holy grail of accounts, right? Your grandma sitting on Ford stock from 50 years ago is probably not making Ameritrade that much money. It's not, right? But if you're there and you're bobbing and weaving all day, that's the holy grail. They make good money off of that. Remember, they're not paying much for these trades, right? Their margin is huge. So call up any single one. I want a per share. I want a per share, and I'll pay X amount, up to 50 cents for 100 shares or whatever. Now you've got yourself a good structure so you can scale out and also lock in profits, okay? So for me, I always like to sell half or a third and lock down profits when I have a winner. And then I move my stop to my buy price and I'll allow the rest to ride using a series of different rules. Moving averages, higher highs, higher lows, and some different stuff. So when we have small accounts, I build with 2 different strategies, okay? Number one is, of course, a handful of day trading setups. I'm going to teach you a couple of day trading setups I use every day. And then the other one is, of course, sometimes you guys have jobs, right? You can't just sit at the computer all day. I learned from my mentor, Paul, who does our swing service, probably best swing trader I've ever seen. And you can swing trade a small account. You take 100 shares or something and you run it for $5, $6, $7, $8, and you build your account that way, right? There's 2 different ways. You can take swing trades and take larger percentage gains, Or you take day trades, and right, you're taking smaller chunks, waiting for the big account builder trades. So, like for example, in one of my accounts that I trade, that I like to build, I take swing trades. And I have a very, very specific pattern that I really like for swing trading, which is after a stock has news, like in earnings. I learned this from my mentor, Paul. After a stock has news or earnings, I wait for the first consolidation, and then I can enter it for a swing and ride it back up. So like I'm in this trade shop right now. Okay, so this stock had earnings this particular day. Okay, and it ran up for a couple days to 64. And then it had, what happens with inevitably any stock that's gone on a big run is it's got to come back down. Stocks consolidate, they come back and correct via price. They have a whole host of things they can do when they're extended. But this is a powerful setup because when a stock has an earnings or some type of PR and it explodes, what happens is its first consolidation or its first pattern that it forms, it can be something really powerful that'll set it up for the next coming weeks. So like this shot, I'm in this thing right now. It's come down all the way down. So like it got up here, came down, and I used the 90 EMA, the 200 SMA, 50 SMA, and 20 SMA as my moving averages. So as this thing comes down, I'm working off that overbought condition. So I use stochastics to measure when something's extended. Okay? So anything over 80 is overbought and extended. Anything above 90, you're talking about extreme levels. Okay? At that point, the stock's got to come back down. So what I want to do is wait for a pattern and wait for the pattern to tighten so that I can get in and play the next wave. Because remember, this stock just had blowout earnings, hence this big powerful move right here. This was an earnings day. I scan for earnings every single morning. And I look for those powerful moves, right? You can run a top gainer scan. So like you could run a scan at night for top gainers. Stocks that are up XYZ amount. And most likely, right, these are going to be some type of news plays. Right? Stock doesn't move up 37% for fun. So these are going to be some type of news play. So I run a scan for these, and then I put them on a list. Now, as it comes down, I don't know where it's going to stop, right? So I'm not going to be like, oh, just buy it because it fell down a few days. I don't know. It could keep coming down and coming down forever. I don't know. So it comes down. I don't know where I'm going to buy it yet. All I'm doing is I'm stalking it. Okay? Now the stock goes sideways for a few days. Right? So now what we're doing here is building what? A support here. See this? How it's hanging on at this 59? So we're building a support here. Okay? And we've got this 9 EMA coming up right up on top of it. So I entered this stock as the pattern. You have a wide range and it's getting tighter. It's apexing, right? Your wide range is getting tighter and tighter and tighter and tighter. And what that means, that apex is where stocks explode out of. Stocks get their power from consolidations. They get their power from bases, right? And those can be inflection points that send them off. And so I want to be trading around these levels. So as this stock is apexing, right, and the range is getting tighter, I take the position. I put my stop around under my price support here. See how it's tapped this level so many times? And I have a 20 SMA right here too. So I put my stop loss. I tend to use a little bit looser stop losses. Wherever you think the stop loss is, add about 50 cents on a swing trade like this on a high dollar stock. I only had 100 shares, right? I'm trying to grow a smaller account. So it's like a swing trade. 100 shares, so it costs you, I got it at $59.40 the price. 100 shares, so it cost me $5,900 and whatever dollars. Okay, easy enough. My risk is about $100. Okay, I can risk that on that type of account. My first target is $64. So I can potentially make $400 for risking about $100. It's pretty good reward to risk. And I know that right now, the market's in a bull market, so the odds of this pattern actually working are pretty high, right? Because this is a stock that's trending. It's got a lot of things going for it. Now I've got a low risk opportunity and I'm still in this trade. It hasn't given me a reason to sell it yet. It's just riding up its 9 EMA. So I like to use my 9 EMA on these trenders because you can keep riding this thing for a lot longer than you would think. And so I'm just trailing at my stop. As it's hanging out this 9 EMA, I'll keep riding this thing because, look, I don't want to sell this thing early. Because what if it goes from 45 to 59 like it did last time? What if it ran 14 bucks? Be a pretty nice gain. So I want to be really, I want to be just up in this thing and let this thing do what it's going to do. And this type of pattern, by the way, is something I use every day in my retirement accounts, in my swing trade accounts, everything, right? Stock explodes on earnings, comes back, build support, you start to build an inflection point, and you've got multiple levels of support, right? You've got support that's been building, so you know where to put your stop. Once you can get out of it, you're starting to run. I ran this. I'm still in partial position in this Boeing. It's an old, boring stock. But once again, you can go in. This is a retirement account type of trade too. You can do these in your IRAs, but you can rip in pretty good gains on these things, and you don't have to use that many shares. And I typically, when they're really accelerating like this, I'll use the 9 EMA. I've been in this one. I was in this one for a little bit too. I'll use the 9 EMA as kind of a guide to keep riding up these bad boys. Now on the other side of things, on a day trade side, hold on. On a day trade side, this becomes very huge. Right? On a day trade side, we're always looking for reasons to sell. And I use the same type of system when I'm day trading. So on my day trade charts, I like to use 9 EMA, I like to use VWAP, and I like to use a 20 EMA. And they work really well. If you get a stock that explodes on some news, it's the same thing as when you're doing a longer term swing trade. When you get a stock that explodes on some news, you can use that 9 EMA and it'll trend pretty well along it as long as the volume keeps up and that heat is coming in. And so that's how you can really stay in these day trades. I like to use a few things. So one is your 9 EMA. The second part is we're using just simple trading rules. Higher highs, higher lows, right? As long as the stock is making higher highs, it's trending. As long as it's making higher lows, it's still trending. And then I still will keep into account my EMAs. So 9 EMA. See how it just follows this thing up for $10, $15 here, $12. That's the way to really kind of ride up on these things. So we'll use a handful of things. This is an art too. It's not just one thing. Imagine somebody just said, oh, you'll just hang on to your gains forever because you used the 9 EMA. Doesn't work like that. I believe in having a dynamic reasons to sell list. One of them is, of course, my EMAs, which is exponential moving averages. Another one is series of higher highs, higher lows, right? Keep them on while they're trending. The other thing I'll be watching for is the VWAP, right? When stocks, if it's a longer kind of day trade, if a stock hangs above its VWAP for a period of time, right, it'll keep bouncing off of it as it's trending. So you'll be able to use a handful of different techniques to be able to stay in them. But this is a huge thing to be able to do. And guys, this type of setup on the swing basis, Paul taught this to me. He trades this in our part-time trader service. It's epic because anytime a stock has earnings, yeah, I'm in this one currently too. Anytime a stock has this earnings, right, when they come back and form that flag and they have that inflection point, you can really get some good, I mean, you can get some good runners on this. If you have 100, 200 shares of something like this, it doesn't take a huge amount of capital, and you can have a low-risk situation where you can take some gains. And this becomes huge because not everybody's going to be, everybody wants to be able to be a day trader, right? Everybody wants to be able to be a day trader. But swing trading, the stuff that Paul taught me, it's the same process as day trading, but you have days to think about what you're going to do in a stock versus in a swing trade, day trade, you have seconds. When I look at a day trade, I have to analyze something in 2 seconds, right? Where when I'm in a longer term swing trade, I have days to sit there and stare at it and think about, okay, I'm going to buy it here. I'm going to put my stop here. These are my potential targets. I'm going to ride it up this. And you have all this time to be kind of analytical about it. Where in a day trade, you have to take all that analysis and then clump it into a couple seconds. Now, so it makes it hard. The advantage is when you can actually do it and you can actually take the analysis, do it in 2 seconds, there's good money to be made in day trading, you know, and you can do it quickly, right? Because sometimes stocks just, they take quick moves and you don't have to wait weeks. You might be able to get it in an hour, but it takes a little bit more skill. Simulate and practice. Guys, this is huge, okay? This is a job. You know, one of the things that I made my mistake on as a trader when I was new, I was always scrounging for money. I was scrounging for money. My mom would take me to the textbook store in college, and I'd sign up for like 8 classes. My mom would be like, "Oh my God, Kunal, you are so studious. I'm so proud of you, my son. Oh my gosh, you are a good boy." And I'd be like, "Oh, Mom, I'm so tired. I got to get all these books." So I'd get like 8 books, and I'd take like 4 of them back. I'd take 4 of them back, and I'd have like $500. I'd be like, all right, these are going to my trading account. And there was no pattern day trade rule back then. So you could just rip and roar. So I'd put that in my account. I'd be like, "Oh my God, like, Mom, I really need, like, I'm just not a smart guy. I used to play dumb sometimes. Like, I'm not really a smart guy. Now I need a tutor. I need money for tutoring, Ma. I mean, I want to get straight A's. I want to make you proud." She'd be like, okay. Yeah, I always knew you were a little bit dumb, but okay, I'll get you the tutor. Okay, that's okay. You're not very smart, okay. But you still got to get the good A's, right? And you be a good boy. Someday you be engineer and you do good. So I put that in. I'm always running something. I'd be playing cards. I'd be gambling on anything I could do. I mean, anything to get money for my trading account. Then you know what would happen? I put in my trading account and I just lose it. I'm like, oh my God, I just schemed all of this stuff and I lost the money. Shit. You know, and now it's like, then you got to be really creative. You're like, how am I going to get more money? Like, holy crap, like, I got school, and if I get a job, then I can't trade. Oh my gosh. And, you know, this is the, 1999, 2000. They don't have a lot of tools yet either. I went about it the wrong way. If I had been in college in 2008 or 2009, 2010 or whatever, a little bit different story. I could have still got the experience of watching things live and building up my database, my pattern recognition, my repetitions by using a simulator, right? To build my confidence, to do all of that, right? Think about like a doctor. He goes to medical school, he pours all this fucking money. Sorry for swearing. My mom's probably watching right now. Actually, she watches all my webinars because she's in Michigan right now. She pop in on the webinar, just say hi. She'll be like, "I see you. I see you. You better not do the swearing." I'm like, "No, Mom, it's cool." But you can go in a simulator and get all of this experience. And it doesn't mean because you trade on a simulator like you're going to make money. But what it is going to do is give you repetition. It's going to give you confidence. And it's going to give you data of what you're good at, what you can recognize. You know, think about a doctor, right? He spends all this money on medical school, 100 grand, 200 grand, right? So he graduates medical school. He doesn't just go and start cutting people up and doing booby jobs, right? I mean, that'd be crazy. He'd be botching them all. You know, he's got to go, and there's a practice that goes into it. There's a practice that goes into it. Before he ever makes the big bucks, there's a certain practice that goes into it. And so that simulator can give you that. That simulator can give you that. I'm going to get a little hat switch here as I'm sweating from, I get a little riled up during these things. So that simulator can give you all of that stuff because this is just a game of repetitions. All right? It's a game of repetitions, and you've got to get them down. When you see a certain pattern 1,000 times, when you see a certain pattern 1,000 times, you will inherently have an idea of what it's going to do next. But when you just put a bunch of money in an account, and how are you supposed to know what it's going to do next if you haven't seen it 1,000 times, right? If you ever see me, like the people that see me that are in here that see me in the chat room, I have the music on. Dude, we're listening to Cher and all sorts of bullshit. I got TV on. We're hooting and hollering. We're telling jokes. My stupid uncle's in the chat room. I mean, we're having fun. There's very little of like, I'm going to buy it here, and then I'm going to put my stop loss right here, and then this is going to be my target. And yeah, like if I hit my target, I'm going to sell half my shares. Now, it's grip it and rip it at that point because I've done it so many times, right? I see it, I take it, and I know what to do inherently. And we have to build yourself up to that, okay? Now, simulation's a little bit easier because in the end, patterns are patterns. But in trading, guys, we are not just trading patterns. We are trading our hopes and our dreams, right? We're not just trading patterns. We're trading our hopes and our dreams. Why are you in this stupid webinar? Right? Because you want to make money. You want to take care of your family, right? You want to prove all the stupid friends on your Facebook that doubted you in high school wrong and post vacation pictures of them and shame them because they were dicks to you, right? You want to do all that stuff. And of course, there's, inherent stuff you want to do for yourself, like take care of your kids, send them to college, take care of your parents. I retired my mom 10 years ago. She's never had to work since her late 40s. She wasn't even making that much money, but just enough so that, you know, she could have what she wants. We do stuff for reasons beyond just, right, hey, I want to make a bunch of money. So we've got to get through this stuff. The simulation is easier, not because trading itself is hard or the pattern's hard. Trading becomes hard because we're trading our hopes and dreams. And so one of the ways to really kind of smooth out your live trading is to have so many repetitions under your belt that you're not really thinking about trading. So it's not necessarily hope and dream. It becomes your video game, right? And that requires screen time, a lot of screen time. Some of it's going to happen via simulation. Some of it actually needs to happen even live. You may go live, you think you have it all, and you don't have it all. But the key is to stay in the game. I find there's this kind of like 3 to 6 month window when you're live, where if you can just stay in the game and get those repetitions, everything changes. You know, everything changes where you're like, holy crap, like now I see it. Like now I see it because you literally see it. And I think that's going to be a huge thing is that, you know, there's no quick fix in this, right? We're trading our hopes and dreams, but we've got to get those repetitions down. You know, I'll give you an example. I have a student of mine, Jake. So I have a summer boot camp where everybody comes to my house and stuff, and all these guys are great guys. This chubby bastard over here. This chubby bastard over here, Jake. He doesn't mind because he's in here. He comes to my house 2 years ago. So this would have been his third year he's been in my house. And I'm actually having a women's boot camp. I have a condo rented next door, April 22nd. I'll have 8 of them here. So there are women, Leanne. But Jake came here the first year, and he was just making $100, $200, grinding it out. He was just grinding it out, getting the screen time. But his attitude was, look, I'm in this for the long haul. I'm going to just take my $100, $200. I live in Destin, Florida. Beautiful beaches, interesting town, but better scenery. I'm just going to make $100, and try to do it. He just wasn't good yet, but he didn't have the repetition. Year 2, he comes to my house. All of a sudden, he's making $500, $600 consistently without really even thought. But it took a whole year to get from, he was really struggling, but he was grinding it out, just locking in that $100, always locking in that $100, $200. And you could tell, he's a bigger guy, he's sweating away, and, while he's trading, and I'm like, man, you really earned that $200 today. And he's like, yeah, man, but he was taking the long-term view. He comes to my house last summer boot camp number 3, and, dude, he was roasting me every day. He was drinking beer the whole time. He's literally drinking these. We have 38 beers here. He's drinking at 10 a.m. He'd be like, I'm on vacation. He'd be guzzling beers and just ripping all these stocks. He wasn't even thinking about it. He's drinking beer. We're listening to music. And he's just ripping and roaring all these stocks. But it took that period of time where he was struggling to make it. But he was just making sure he locked in 100, 200. Because he had the knowledge to do that. When you take a boot camp or any class and you have specific knowledge, you have enough knowledge to grind out some gains. But it takes the screen time and the dedication to journal your trades and keep up with stuff to get better, right? How does a basketball player, think about the NBA, right? When you're a rookie, you can be really talented, but it doesn't mean you're the MVP, right? Even year 2, you're never an MVP. Right? It's when you're year 4, year 5, year 6. If you take the long-term view, you'll make some money in the beginning if you do it right. But by year 2, hopefully you'll make a little bit more money. Then by year 3, he's coming out, he's boozing while he trades, and he's totally great. He had no trouble ripping and roaring these stocks, but it took a little bit of time. It wasn't just something where he came in and was like, oh my God, I'm making all this money. It doesn't work like that. For my students, when we have our course, we put them on simulators too. So I use this TC2000 software, guys. It's $29.99 for the gold package, and I think if you put $10 in it, you get live trading, and it's pretty adaptable. They have a pretty sweet simulator here. I've never had to use it, but a lot of my students do. You can go in here and trade from charts, and you can come in here and say you want to so buy, sell, close. You can come in here, see this, and move it. And you can move it to any window you want. So look, see that? Now you swap it there, and you've got your order buttons. Oh yeah, this thing is hot, John. This is not you got to pay for something like this. Look how pretty it is. Say you want your trades or whatever, right? So you got this. You can slide these around anywhere you want, and it's pretty cool. You've got this. Now you can come in here. Boom. See that? And so I've got the version 17. Now you've got, see, you can go here, buy, sell, and you'll have a simulator. You can trade directly from the charts. You can trade directly from the chart. So you're looking at this thing, and you can be like, boom, I want to buy this Wix. And see this? I want to be at the bid. I want to do this, buy it. And they will put in, you can, put in via the chart, your stop losses, your targets. See this shit? It's pretty, I'm sorry for the swearing. I get really excited about trading sometimes. But you can do all of this stuff. You can buy it at market, whatever you want. TC2000 is very, very customizable, so you can have all this. And just to go on a tangent, it's like, see, like when I'm watching, so see like this, so say I've got a couple of people ask me how I keep track of charts. Well, on my TC2000, I have different layouts. See that? This is like my layout for daily charts. This is my 4-window layout for the indexes. And this is my intraday kind of layout for with my watch list, my scans. I have notes, so like I can put notes. So like say this, see this? I have, say I wanted this OLED or something. I'm like, oh, I want to buy this thing here. I'm just throwing a hypothetical, I don't know. You can go in here and see this, you hit this button here, and you can put in a note. Now I'm just kidding with that, but right, you can do it and you save it. So now like you have this note here, and you can pull up the chart, you can pull up your notes, and so I can keep track of like all the stuff I'm looking at really easily. One of the things about trading, guys, is to just be organized. To be so organized that you don't miss the stuff that you're looking at, right? And so having a tool, it doesn't have to be TC2000. I'm not trying to plug them away or anything like that. It's just a way to keep organized. Like I have all these alerts here. I have all my scans, and look, you can write 1 million scans. I made all these layouts. And so like see something like the 6 windows. I can detach this. Check this out. Dun, 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 dun. See this? I can float it in a new layout. So now I've got this, and I can move it to another monitor. I got 4 monitors up here. So I can move it up here. Even when I'm traveling. So like in the last year, I've been to Hawaii, Bali, Colombia, fucking Sri Lanka, all over the place. Right? I'm not taking my 4 monitors with me. I have a MacBook, and I have an Asus computer, and I have an iPad Pro. iPad Pro is awesome. You can turn your iPad Pro into second monitor. So I have my computer, now my iPad Pro. So what I'll do is I will drag this into my iPad. So then now, like, I'll be able to watch 6 stocks, and then, you know, I can still run my scans and all this fun stuff much easier. You know, so it's a good charting program for that. Developing discipline. You may see it, but you need to do it. This is the hardest part of trading. I find that this all stems from your personal life sometimes. When we are undisciplined in other areas, it shows up in our trading. I have a business coach. His name is Ben Newman. He trains mostly athletes, and I've had numerous business coaches over the years. Guys, in general, if you want to be an elite performer, you always have to seek help. That's the one thing I've always been good at is, you know, I had Paul, my trading mentor, and, you know, when Paul was done with me, I was like, I want to learn about business. So I found business mentors, and I called them up. I asked them questions. I'd pay them. I'd have them take me on, whatever. And I have a performance coach, Ben Newman, who's a business coach. First question Ben asked me every time I talk to him. Say, he never asked me about my trading, but that's, you know, one of the things we have to talk about. He's a performance coach. Hey, Kunal, what's going on? Da-da-da-da-da. How's your weight? Da-da-da-da. What's your weight at? At first, I'm like, huh? What? My weight? What's your weight at? Go weigh yourself. All right, I'm at 189 or 180, whatever it was. He logs it. Why? Because he'll be able to tell from my weight whether I'm keeping discipline, whether I'm drinking too much, eating bad food, and he knows that it'll start to seep into my trading. And it does. When I'm all over the place, and even something like my weight fluctuates a lot, it means either I'm stressed in my personal life, or I'm eating too much sugar, I'm drinking too much, I'm, you know, single man, I'm gonna be hitting it sometimes, right? Looking for, you know, my notebook type of love, whatever, right? Sometimes I'm going to do all that stuff, but, you know, as I'm 35 years old, my weight will fluctuate more, obviously, when I'm doing all this. So that's the first thing he asked me, okay? Because that's the hardest part. And I asked him, I'm like, Ben, why does this matter? He goes, this is the one thing you can control, Kunal. You can control what you drink, how much beer you drink. You can control what you eat. You can control this aspect of it. And if you can control this, you're going to be able to control your trading, because you're going to have discipline in your personal life. So it's going to show up in your work life. I'm like, oh, fuck. Dude, you're like fucking Mr. Miyagi over here. And he was so right. Like, you know, that type of stuff. If I'm undisciplined in my personal life, how am I going to act in my trading? Am I going to honor my stop losses? Am I going to stop chasing? Anybody chase? I'm a chaser, historically. I can decide I'm a chaser. Anybody chase? They buy stock too high every time and it goes down? It's an ugly, ugly habit. It took me years to break that. That's where the discipline comes in, right? Do you scan every night? Do your homework. Do you build your watch list? Do you do the prep work? Do you do the prep work? Your consistency and discipline in your routines in your personal life will translate into consistency and discipline into your work life, okay? So your personal life, if you got a lot of stuff going on, fucking girlfriend's nagging you, your mom's calling you a piece of shit, whatever it might be, you've got to quell all of that sometimes, right? Clear mind, easier trading, okay? When you have that stress and it comes in from different angles before you even make your trade, it starts to show up in your trading, right? And so that becomes a huge thing. But the best thing that you can do is consistency in your preparation, consistency in your routine will show up as consistency in your trading. You know, mark my words, it's happened to me for years. You know, they say there's an old adage, you booze, you lose. Remember that before you go out tonight. Learn correct position sizing. Risk 1 or 2% of your account value in every trade. Okay? So if you have a $10,000 account, you can risk $100 to $200 on a trade. Using this formula, amount of shares equals amount of risk. So it's a buy price minus your stop price. So, you know, I like to use, like, you know, dun, 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 dun. Hello. So what that means, all right, hold on. I got you, bro. Hold on. Hold on. Get all this junk on. Hold on, pretty mama. So your amount of shares equals your amount of risk. Okay? So what that means is, say you're risking $100 per trade, and you have a 10-cent stop loss. How many shares could you have? 1,000 shares. If you had a 20-cent stop loss, how many shares could you have if your risk was $100? 500 shares. What if you had a $1 stop loss from where you bought the stock and you wanted a $100 risk? How many shares could you have? 100. So, you know, we use this kind of simple position sizing sheet. Let me make this thing a little bigger. Whatever. It won't get bigger. But say you have $10,000, right? So your risk is 1%. So that means your total risk on a trade is $100, okay? What that means is not that your stop loss is 1% of risk away, the 1% away. It means if your stop loss is hit, you will lose 1% of your account. The reason I like to do this is it means that theoretically you have to lose 100 times in a row to lose your account. 100 times in a row to lose your account. And of course, there's, some fees and stuff, but I'm giving you kind of a normal primer, right? So I like that type of risk because I know, imagine you go on a slump and you lose 5 times. Well, you're only going to lose 5% of your account. It's not the end of the world. If you lose 5 times in a row, you get to get a fucking slump. Sorry for swearing. But it's only 5% of your account. You will survive, right? You can make that back. So I like to use a 1% risk. So what that means is hypothetically, say you've got a $10 stock. Okay? And your stop loss is 4% away. You're going to have 250 shares. Okay, so now this becomes a huge thing in terms of if your stop loss is 2% away, you're going to have 500 shares, right? Because your risk is going to be $100. Now, if your risk is 2% away, your share size is going to double, right? Because your risk is double. So something to keep in mind. Now, you don't have to necessarily kind of have a spreadsheet and do all this fun stuff, okay? What you can do, what I would do personally, the spreadsheet is nice because, you'll get exact ratios, but I like cheat sheets. I'm a big believer in just making like really, really fast cheat sheets. So, like I use this like sticky notes program on Windows, right? So, and it stays wherever. You can transfer this thing to wherever you want. So you use a sticky note. So right, you go in position, sizing, sheet. Cool. So now where we want to go with this thing is, say my risk is $100. 10 cents away, I can have 1,000 shares. Thanks, Pete. 20 cents away, 500 shares. 40 cents away, I'm not a mathematician here, but I think it's 250. $1 away, 100 shares. And, change it around to your own parameters. You see, make this thing real small, just put it in your little corner, right? So now you're like trading. Say you got one of these kind of setups over here or whatever. Transfer it to wherever, and now you have it. Pretty cool. $500 a day keeps the cubicle away. Words to live by. Words to live by. $500 a day keeps the cubicle away. Even to this day, even though my goals are different, I still live by that rule. Because I know that, look, if I lost everything in this world and I had to start over, I know that $500 a day, say I lost it all, the business, everything, I can start back up, and $500 a day keeps the cubicle away. So how do you scale this? I'm going to talk about a couple setups in a little bit, but how do you scale this bad boy? Actually, we're going to get into setups first. We'll come back and learn that. So set up to learn. So I've been using VWAP. VWAP has for me been kind of the hottest setup for this 2017. So I found that this kind of setup, it's been working really, really well. Your traditional flag patterns and stuff, they've been having a little bit of, they've been 50-50, but VWAP plays have been working really, really well. So, I use VWAP. It's an indicator. You can put it on your charts. It's just an indicator. Look, if you guys don't have a charting program, you can use this. Go to freestockcharts.com. It'll look similar to mine. It just won't be as good. This is the free version of what I use. Whoa. What the fuck just happened? You know what? We'll stay away from this one. Hold on. Let's go to Firefox. Hold on. Firefox. All right, let's go to Firefox. These bastards are digital tigers. They put their homepage on everything when you buy a computer from them. Oh yeah, freestockcharts.com. My bad. Did they really? Seems to work. Oh, you're right. Holy crap. Back to, that changes things. Back to free stock charts. There we go. Man, that's some bullshit. Why is Firefox playing games like that? So you can add in. So if you go to like new here, create a new layout. What you can do here is put in daily charts and add in your moving averages. So go in here and add in moving averages. So if you add it 3 times, you'll have all your moving averages. Then go to your daily, change this to 5 minutes. Hold on. Lower this. Add in VWAP. That's, you know, use it brown, and now you get your VWAP. And then you can add in whatever moving averages you want, 9, 20s. Nine, boom, exponential. Hot damn! All right, now add in moving average. I hate Thinkorswim for some reason. Man, it's too hard to use. Anybody use Thinkorswim? I feel like you need a PhD to use Thinkorswim. As my mother would say, I'm a complicated man with simple tastes. Good, 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 good. So you can use this VWAP here. You know, you can go on free stock charts and use this, and it'll be free. But what are you going to do? And but, you know, I mean, I know like 0 professional traders that use Thinkorswim. So that's also the other thing that's always in the back of my head is people use it because it's free. So, you know, they don't use it because it's good. They use it because it's free. All right, where were we? So, this has been my #1 kind of setup here. Let me grab into this. Hold on here. We call this the VWAP fizzle. This is a we call it the VWAP fizzle. This is a fizzler. Okay, this is a VWAP fizzler. Okay, this has been the hottest setup for me in the market. So, every single day, I run a couple things here. Let me close all this crap here. I run a couple things. I use trade ideas for like my pre-market gappers. You don't have to use this. I mean, it's pretty awesome, but it costs $100 a month, and for some of you guys, it's gonna be a lot of action. But in the morning, you have these. I have pre-market tabs, so you can go in here and use like gappers. Okay, so I'm looking for pre-market gappers. Okay, so what pre-market gappers mean is I'm looking for stocks that are having some type of movement pre-market for earnings or PR, okay? Earnings or PR. So this has been, you know, a strategy of mine for a very long time because I want stocks that have fire. I want to have stocks that have movement, okay? So when a stock has some earnings out or it has a PR out, what's going to happen is it's got this order flow that's independent to what's happening in the market, right? It's got this extra juice. What you're going to do is marry your technical analysis skills with the fundamental catalyst, which is pretty hot. You know, pretty hot. So I'm going through my pre-market gappers every morning. So 8:45 in the morning, I get online with my mentorship crew, and we get online and I listen to all the watch lists and stuff that they have, and we go into my watch list and we start scanning for gappers. So I'm scanning for stuff that's either breaking out or breaking down on good earnings or bad earnings, and then I'm putting them on a list. So like you see, I'll put them on a gapper list here. So I'll be like, blah, 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 and I'll start putting them on a list. Now, if you don't have trade ideas, because I know it's a little pricey for some people, you can go to, by the way, for my students, I'm working on something with trade ideas so we can at least get the pre-market stuff for like, you know, 15, 20 bucks or something. We won't be able to use it regular market hours, but we'll be able to use it pre-market for, you know, X amount of dollars, and so we can get the gappers. So you can use the stockmarketwatch.com. It doesn't give you as good of, sometimes like a stock could have 8 shares in volume and it'll show up, but for the most part, if you look for the ones with volume, these will be the real ones. You know, it's just a free website, so it's not going to be that good. Now, I start putting these on a list. So I go through every single one of them, and I see which ones are clean. I'm looking for clean daily charts. I'm looking for breakout charts. I'm looking for stocks that have the ability to move in the way I want them to move. So I'm looking for a break over key levels of resistance. Then I'm watching the intraday price for a very, very specific move. So what will happen with these is, so like I had this TPS. So this is one of my bigger trades of recent, or not bigger trades, but I think my most memorable. So this stock had this bad earnings. See, this is 65, opened up at $47. Think about that shit. It had a $20 drop, but the news is bad. And what typically happens is that particular day, the stocks will keep dropping. Hold on one sec. I've literally been online teaching today for 12 hours. Drops down $20. Okay, so I have this on my lots list. Why? Because it's breaking all these levels of resistance, or support, I'm sorry. So now, what I want to be doing with this thing is saying, okay, the stock intraday has dropped down. See this thing? And so all day, this thing is just hanging out right at the VWAP. See that? Right at the VWAP. And typically what you'll see is when the 9 EMA closes up on the stock and it stays under the VWAP now, what you end up getting is what we call a VWAP fizzler, which will be, you can short it and you put your stock above the 9 EMA, and now the stock can fizzle the rest of the day. So like oftentimes the stocks, because they're tired at the open because it's dropped so much, they'll go sideways, or sometimes they'll even pop. But when that 9 EMA converges on top of it, it gets the stock to just fizzle out, and it'll fizzle into the close. And, you know, I'll usually just ride this thing back down, you know, till I start getting my profits. But you'll be able to take kind of $3, $4 chunks on these type of trades relatively quickly when you nail them. So check this out. So this is so this is ATHN. So like, see how this stock gapped down at the open, and then it bounced up. Now I don't typically long them because I don't know how to time these things yet. It's just not my cup of tea. I don't like going counter trend. I stay within trends. So stock pops up and it comes back down to VWAP. VWAP's acting as support because it's the first time you test it. The first time you test anything, it's usually very strong. Stock pops up, it makes a lower high. Comes back down, test it again. Now you can't short it here. Why? There's too much space between the VWAP and the 9 EMA. When you have that space, the 9 EMA can't come down and sandwich it to make it fizzle. Okay? So you've got to just chill. So the stock's just hanging, pops down under VWAP, still can't short it. But see how it goes sideways for about 5 minutes? And then 9 EMA tests right on top of it. So see, now you got a 9 EMA and VWAP convergence. That's the spot where you can fizzle into the close. I love this setup because look, you can take, it doesn't matter what size account you're taking. Like guys that trade for me, you know, they can have small accounts, 2, 3, 4, 5,000, but they have access to 25, 30,000 buying power. If you're just trading in Ameritrade or something and you have a few day trades every week, right? This is a very powerful setup because you can take 100 shares of it and let this thing fizzle down for a few bucks, make your money, lock it in, and now you are part of an amazing crew of motherfucking fizzlers. Sorry for the swearing. I'm just a little excited. Check this out. ALV. So stock gaps down. So remember, what you do, you can use trade ideas, but it costs $100. Or you can go stock market watch. Stock market watch will only give you a few of them, though. Sometimes you got to dig down the list. Or you can join somebody's chat room. Like I have a chat room where some of the students trade. There's Investors Live, Timothy Sykes. There's a lot of good traders out there. They'll have chat rooms where they're kind of telling you about probably some of the earnings plays in the morning. Certain chat rooms only do small caps, and certain ones do biotech. So you always try to find one that kind of fits your style. But stock gaps down, pops up, and now it's just hanging out on the VWAP all day. But what will happen is at some point, the stock is just, it's consolidated. Remember, the stocks get their power from consolidations and bases. So at some point, as it's going sideways, it's building energy to go back down. So as it's coming down, you could break under it short, set your stop, let her rock. I do this VWAP Fizzler almost literally every single day now, you know. So one of the things that you guys can do is it doesn't have to be from your gappers list, okay? It doesn't have to be from your gappers list. You can go on like middle of the day, after the first couple hours, run a top loser scan of stocks that are down the most for the day. And what you'll find is a whole host of stocks right around noon, kind of either running into the VWAP or fading under the VWAP, and you'll be able to use them as particular setups. So see the fizzler here? Look at guess. Pops down. See how it spikes up? Then it gets down to the VWAP. See that? Remember, guys, VWAP is not just an indicator, it's a lifestyle. It's a lifestyle. We're living VWAP lifestyle right now. So then it's right. You come down, and then as your 9 EMA is converging on it, you can take it as a fizzler. Dun, 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 dun. VWAP is the lifestyle. It's not just an indicator. See this PRMW? Stock gaps down. Pops up. Comes all the way back down. See how your 9 EMA is just rusting right on top of it right here? You know what, Brandon? I don't know. I've never heard of the 8 EMA, so I never actually tried to use it. I don't know. My mentor taught me 9, and I just never thought of it any other way. Fizzler, and now you ride it back down. Now look, it doesn't feel like much. You get 3-4%, you get something here or there, but these type of gains, when you can get $1, you can get 50 cents, you can get $2, you can get them in an hour or two. Guess what? You can make money. Now I would have never taken this one because it doesn't have enough volume, but sometimes this is the beauty of the fizzler. See, it fizzles right here. Well, if it doesn't work and it breaks back above, you just get out. So you get out for a small loss. Sometimes, guess what? The fizzle won't work. Now, I would never have taken this trade because it doesn't have, it didn't have enough volume. But, you know, overall, you know, that's the kind of the nature of how you would get out. See this? This is a fizzler. But sometimes they don't work. The beauty of the fizzle is that you will have limited risk on the trade as a day trader. So between the swing setup that I taught you, right? The swing setup I taught you, which is the earnings play, then the first consolidation, so that you know you could hold stocks for 5, 6, 7 days. And then this as an intraday setup, you've got kind of two tricks here that you can use to get pretty good gains as long as you can learn the ins and outs of them. Okay, so look, see this stuff? I take snapshots of everything. Why? Look at, there's a million different types of ways to use the VWAP. You've got to have data, right? But VWAP Fizzle is one of numerous ways I use the VWAP, but it's my favorite new one. The VWAP Fizzler, I haven't even put it in the Bulls on Wall Street course book yet, but it's about to be in the new one. Now, remember, there's pattern day trade rules, of course. So you can't make more than 4 day trades in a 5-day period if you have less than 25,000. Okay? You can't make 4 or more day trades in a 5-day period unless you have 25,000. So if you have less than 25,000, swing trade your way till you get, so it's 3-day trades. I'm sorry, you're totally right. So if you don't have 25,000, you're going to have to swing trade your way into it. So do the swing trade setups that I showed you. Right? Do the swing trade setups I showed you. Do the trades like shop or, BA. And look, you can do them on smaller, you can do them on smaller stocks too. There's a lot of, there's a lot of different types of stocks. You don't have to do them on large cap stocks. You can do them on $10 stocks and, all that fun stuff. That setup is something you can use on a million different types of stocks. So something to kind of keep mind of is you don't have to do them on this. One of the stocks I'm looking at right now for that similar setup is Square. So it's gapped up and now it's starting to flag out a little bit. It actually busted over it today, but I was already gone, so I wasn't able to take the trade. But something I'll be watching tomorrow. Something I'll be watching potentially tomorrow. So if you don't have 25,000, make sure you swing trade your way. Otherwise, there are firms out there, hedge funds. You could join a prop firm, get a prop license or something, and join a prop firm where people assign you capital. I have a hedge fund where the students that graduate my boot camp, they actually have an opportunity to trade in the fund where they can have big buying power. They can have access to more capital as they're profitable. There's a per share commission, so that are not marked up. Like I don't mark them up. We have profit splits. So say you're a profitable trader, and every couple weeks you're doing pretty good. I approach some of the students and say, hey, I want to give you 20,000 in extra capital. Why don't you give me 20% or 10% or whatever? We'll work something out. And they come and trade with me. So it's pretty cool. And there's a couple of firms out there like mine. Otherwise, you do you got 3 day trades a week, and then just build it up slowly until you get to 25,000. So, you have a couple of options. Look, at some point, we have to bite the bullet and build our accounts. No matter what the parameters are, we've got to go out and build that account. And so there are a lot of traders that frankly are over traders, and having only 3 day trades a week probably is going to slow them down into being pretty selective, and maybe it could be a help. Now, go ahead and use everything I taught you. Okay? I have tons of YouTube videos. You can always email me any questions, or we have boot camps that are continuously going on every couple months. So I have a boot camp starting, I believe, next week on Tuesday. I do live classes, okay? I do live classes 4 days a week, just like this. I'm all hopped up and ready to go. Sundays, Tuesdays, Wednesdays, Thursdays, okay? Classes are recorded for playback, so you have unlimited access to classes. Guys, we have a sweet boot camp page where you can watch all the classes and do all the fun stuff that you need to do. We have quizzes, Q&A sessions after everything, homework. We get the students on the simulators. They send me business plans. So just like in any business, you don't walk into a bank and ask for $1 million without a business plan, right? Well, as CEOs, of your own trading business, you have the obligation to yourself to actually come up with a plan for your life, your trading style, and what you want to do with it. And so, these are some of the things that we work on in the boot camp, but it's pretty cool. I teach class live, 8 p.m. Eastern time. Everything is recorded, archived. We have a boot camp module page, so you have access to, the registration links, your quizzes, and then everything is recorded and archived. Anything you would need, templates, calculators, whatever, you need certain trades graded, you can put them on this document, and I'll see them. So you're like, oh, check out XYZ things. The good thing about this particular boot camp, now that we're getting started too, is I have some we've made some new templates for our journals and stuff. So I've got some students that have been with me for a while, and they've got just great, they use great journals. So we've got all access to all this stuff here, where they'll come in and they'll be putting in, see this stuff? Okay, I bought this. Cap, what's the setup? What's the entry, exit? And then they'll be here, and I'll be able to see the screenshots of their trades. And then they have, see the spot here, Kunal comments. After Kunal comments, right? What kind of business, Alejandra? And so then I get to leave comments and all that fun stuff, and it's pretty cool, So we have templates for all of that stuff, and then you even have access to all the old boot camps. So you can sit there and watch all this stuff. We have trading psychology videos and all that fun stuff. It's pretty cool. And you have lifetime access. I have students in here in this webinar right now that have come in class on Tuesday that have been with me for 4 or 5 years. I'm on boot camp, I believe, number 32. So I've been through a lot of these bad boys. I'm still here kicking. That's the one thing There's death, taxes, and Sundays, Tuesdays, Wednesdays, Thursdays, I'm going to be doing boot camp. So if you have any questions, feel free to, just email. You can feel free to text me if you ever just want to chit-chat. I do warn you that I do not do phone calls. I only do FaceTimes. I meet shocking people because sometimes people will text me or they call me. And by the way, I never pick up the phone when somebody calls me. I have it permanently do not disturb for efficiency purposes. So what I'll do is 1 hour a day, I'll turn off my do not disturb, and I'll see all the notifications. I just go one by one. I just FaceTime away. So if you do try to get a hold of me, don't worry if I see you in your PJs. That's okay. I'll be in mine too. But I'm just a big on FaceTimes. It's so impersonal to text. I don't know. I feel like a pedophile doing it. So guys, we got early bird pricing. You can go here to bullsonwallstreet.com bonus if you want to just put your name in via the net, or just email me. I don't even know what's this link all about, Eric? Let's see here. Boom. Oh, that's not the right one. Dun, 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 dun. Hold on, little love. Bonus. Oh. Eric, does that link don't work? Oh, it does? Are you sure? Oh. And what do they do? What if they want some info? This is complicated. Oh, I see it. Got it. That's a nice page you made there, buddy. Dun, 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 dun. And guys, you know what? Don't even worry about that damn page. Pages are complicated. You can just send me an email. I'll walk you through it. We'll have somebody call you. All that fun stuff. Let's open this thing up to some questions, and we'll get this party going. By the way, Eric, when will we be picking? So right now there are, hold on. I'm going to download the list here. Dun, 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 dun. You got to download this list, Eric. How else will you know who's here?
Yeah. I got it. It'll show up in the back end.
Oh, okay. I'm downloading the list right here of everybody that stayed. That way, we will be able to pick the 5 people for the mentorship. I'll be emailing you guys mañana, which is tomorrow in Spanish. And hey, Dave Furlow says that he would be willing to buy you off. Yeah, we do accept bribes and gifts, of course. We're humans. So, you know, that's totally cool. I'm just kidding. But the mentorship session with me is going to be epic. Let's open this thing up to some questions and see what we got. Guys, I apologize if it takes me a little bit to get to you guys, but I will get to you guys. Let's open this bad boy up and just be gentle with me. It's been a long day. I'm just kidding. Oh, yeah. I'll start at the beginning here. Dun, 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 dun. Hot damn! What do we got? What do we got? Hey, Robert, man, good to see you in Italy. Okay. Do you have any tips for trading from overseas? That's a good question. So, typically, a lot of overseas brokers. So I have a student of mine, Simon Jones. He works with me. He's one of my students. He trades at Interactive Brokers. He lives in London, and then he's trading the U.S. market. So, you know, you can open an account there's probably all sorts of American brokers that are international that would allow you to trade U.S. markets. What Simon was telling me that's pretty awesome and why it really works well for him. So, you know, you can go to work, like if you're in England, London, Finland, Italy, wherever, you can go to work. Then by the time you come home, the market's open. So then you can trade the market like as you're home and sitting around, but you've already done your work. Because I do believe it's important to keep your job and keep your income going while you're trying to learn to trade. Because that added stress of not having income, you know, and then you're trying to force your trading, I think it puts an undue pressure on you that most people are just not able to handle. You know, it takes a special person to, you know, pull that one off. Farouk from Russia, what's up, baby? Dun, 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 dun. Did you trade during the 2008-2009 bear market? I did. Bear markets, they don't come around that often, once every decade or so. And frankly, there's more volatility. But you can, you know, if you know how to short, and of course you can always long inverse ETFs, there's money to be made. There's just a change in structure. So like in class, we teach there's 4 different market cycles. Accumulation, distribution, run up, run down. So your rundown phase is very similar to your run-up phase, which is your bull market, but you kind of doing everything in reverse and with additional volatility. So with, you know, lowering your position size to handle the volatility, and then, of course, adding in some shorts, inverse ETFs, you'll be able to still capture what you need. It's still a tradable market. Trevin, what's up, baby? Trevin. Okay, so my man is saying, you know, he's been making $300, and then today he finished down with $800. So I'd say, first of all, you got to give yourself some type of max pain, right? You know, if you're making if your biggest gains are $300, $400, then you need to keep your max loss at that level or even less. That way, the one bad day is basically does not wipe out multiple good days. Hey, Brandon, what's up, baby? Should I try for 2, 3, 4 setups or just master one? Well, I'm a big believer in, you know, having complete mastery over something. So I'd rather you master 1 or 2 than know, like, be okay at 6. I do think 2 is a good number. Like if you got a long pattern and a short, or a pullback and a breakout, or a swing trade and a day trade, depending on what you're trying to do with your accounts, I think that'll give you a good mix and be able to let you kind of play different markets. Hey, Patrick, man, Miami's is not my type of town. I love Miami in some ways, but, man, there's too much traffic for me. I'm a simple man. I love the beach. So Miami's has got too much, it's got too much action. Ankit, what's up? Ankit Agarwal. He's mentioning, while trading the flag pattern sometimes, he's having trouble knowing when to take profit. So part of it is having targets. The other one is using a confluence of either moving averages or reasons to sell that would get you out of a stock. Any of those could be helpful for you. It's not a 5-word question. Learning to sell there's nuances to it depending on whether you're a swing trader, day trader. But something to think about is, get a piece of paper out and make a reasons to sell list of like why you would get out of a stock. And what would also keep you in them as they're going, and start to build a dynamic system around that. Hey, B-Rad, I've been there too, man. Up 3,000, give it back, and go back up, and woof, it's tough. Hey, Mr. Turk, man, what's going on? My business partner Omer's a Turk. Or your last name is Turk, but whatever. We're still cousins. Hey, Ethan, what's up, baby? Ethan's mentioned he's got a strategy, but he does not get to move every day. Well, if your strategy calls on you to trade every day, then you need to be in better stocks. But if it doesn't, then you got to just be more opportunistic and wait for those right movements. Guys, we are only as good as the stocks we trade. Remember that. We are only as good as the stocks we trade. We have a responsibility to be in the best stocks. Every day I make a list. I go through the big gainers. And if I missed one of those trades, I sit there and I try to figure it out. Why wasn't I in this stock? What was wrong with my process so that I could have been in that stock? Because I have a responsibility as a momentum and trend trader to be in the hottest stocks. And so always be sitting there trying to figure out ways like, how could I have been in there? Hey, Grumiza. Hey, Grumiza, why don't you send me an email and then I'll Skype you or something. I'll figure, we'll work it out. You're going to, I don't have a one-word answer for you, but send me an email. Yeah, I'll grab your email. I'll send you an email here. Hold on. Skype. I need your Skype. So if you can email me your Skype, I'll hit you up, and I don't know what time it is in Romania, but I'll get a hold of you this weekend or something. Hey, Mr. Gorch, yeah, I use 5-minute candles. Finn, what's up, baby? No weed pharma stocks for me. Not that there's anything wrong with them, just not my particular flavor. Marvin, what's up, baby? Bobby Bonilla's big brother. I do not use RSI. I use stochastics. It's similar, but I find it more effective for what I do. Mr. Crone, how are you, sir? I've been stubborn with bias and not looking at the chart the past few days. How do you adjust your bias on stocks throughout the day? If I don't have a big picture thesis on my daily chart of what a stock should do, I don't take the intraday trade. So they have to align. So the most powerful trades or when you have alignment on multiple time frames. So you have an idea of what should happen on the daily, and then you're aligning it with smaller term time frames. But when you're just going long, short, long, short, long, short, depending on what's happening, but the big picture is not supporting it, you end up getting mixed results. Hey, Tim, Mr. Sawson. So on dust, the flush was imminent more because it was extended running into resistance, and then it started to round at that resistance spot, which tells me that, you know, you're going to be getting that big dip. Are you big on setting alerts, or does that just get to be overkill? I set some alerts if it's something really key that maybe could be days out in advance. But if it's something that's like ready right now that I want to trade right now, I won't put the alert because I need to be in it. Mr. Patel, how you doing, Al? Would you take the small income if it's going further? I use my EMAs and I start to ride that thing down, right? And then when it starts to round and it breaks over, I'll usually get out. Mr. Schwing, do you think market makers manipulate stocks to flush out stops? I don't know. I'm not that big into the conspiracy theories. You know, these days everything is electronic exchanges anyways. There's not as many market makers, so I'm not sure. Hey, Jason, how you doing? Jason Ulner, money management in terms of leverage, it's more than a one-word answer, but how you got to think about it in terms of risk and probability. If you have high probability and low risk, say your risk is $100. Well, whether you had $5,000, $6,000, $7,000 in it wouldn't matter because your risk is still static. You know, you have small risk on the trade. So you can lever up a little bit because your risk is still pretty small. Now, if you had a big risk on it and you levered up, then you would blow out your account. So you've got to measure risk and probability always. Hey, Miguel Murillo, how you doing, brother? Good to see you. Do you use 5-minute charts on stocks that are $1 to $10? Yes. Hey, Dana, how you doing, hon? Does your scaling out change based on the time of day? Not really. It depends on more like if stocks are running hot or if the market's choppy. Depending on market conditions, I may change. And also depending on like how much volume's coming in, like does it have the ability to actually keep going? What is a typical time frame a day trader should trade? Hey Byron, so I use 5-minute charts and I look at daily charts. So like when I'm day trading, I'm kind of looking at my stocks like this. This is my 5-minute daily. Nothing too crazy. Hey, Mr. Romero, Giovanni, what's up, baby? Yeah, like you know, I start everybody off at the same level, which is brand new traders, right? We start how to set up your charts, market fundamentals, you know, all that fun stuff. Hey, Merritt, how you doing? I'm from Northville, Michigan, so like in between Ann Arbor and Detroit. Hey, Greg. So a lot of traders just trade a handful of stocks. I don't just trade one stock, but you'll see like almost every day there's like some stocks like Nvidia, Tesla. There are some stocks I take for income trades pretty often. Hey, Mr. Purnell, long time no see. How are you, sir? Hey, Jose. learning how to trade is just dependent on the person. Some people, they look for mentors. Some people read books. Some people go on YouTube. It just depends on the path that you want to take. The big thing to think about is just learning to trade is no different. Like you're in college, you're learning to be an engineer or whatever. Learning to trade is like that similar path. There's that certain book knowledge, then you have to apply it, then you got to go do it. You're going to have a similar path. It may not take like that many years, but it could. Hey, Fod, how you doing? TC2000 has pre-market data, but it does not scan for gappers, I don't believe. Somebody recently told me it did, but I haven't figured out. I haven't tested it yet. Hey, Chris, TC2000 strictly for, it's more of a charting and scanning platform versus, the level 2s. Hey, Harmon, how you doing, brother? How long did it take for you to consistently start making money? And how long do you look at charts a day? So I probably go through 500, 600 charts every night. It took me years to get consistent. During that time, there was not any mentorship out there, anything, right? You're kind of figuring it out on your own. And consistency is something that we all struggle with, no matter how many years you have under your belt. Like to this day, I still will struggle with, breaking rules and consistency. But now it's like, you have that kind of faux pas once every 2 weeks versus every trade or whatever, right? It's always a part of us that struggle. It's just, can we minimize it more than we did before? Hey, Steve, how you doing, Mr. Schwartz? We don't trade as many small cap stocks, so it's not necessarily like you're going to trade $2 stock and it's going to pop on the first 1 minute candle type of thing. We do tend to trade more liquid, regular momentum stocks. I'm on screen share during the day, so I am kind of calling out the trades as they're happening. But, I have my watch list up and stuff so people can get an idea of like what I'm watching, and I'm talking kind of people through stuff. In any chat room, you can never follow anybody. I don't believe so. I don't think you should try, because when you try to just blindly follow people, you're always reactive to them, right? You're always late to them. But also when you don't understand what's happening in a trade and you're like trying to figure it out, it adds a lag. It adds a huge lag. The other thing is, this is what happens with chat rooms. Trader alerts, you buy, you're late to the party. Stock doesn't go the way it wants, so the trader sells it, and then you end up selling it later, so you get a bigger loss. And this happens, and there's like, this lag. Then you get a couple losses. Then what will happen is trader alerts, stock explodes. You got a few losses, so you get a good, decent gain, and you sell early to lock in some gain and cover your losses, which is a normal thing to do. Trader guru holds on and has this home run trade. Now the rest of his trades may be duds, but he's still up for the day because he had that home run. But you weren't able to capture it. When you're kind of blindly following somebody, you're always going to sell too quick. So I like the idea of people trading along with people, using a chat room as idea generation, a learning tool. I'm not big on people just saying, okay, I'm going to follow this guy and make money. I don't think it works like that, because even in theory, if everything went perfect, two brains are never the same. So when one person has $1 million, another person has $20,000, the way they look at money and risk is just different, right? And so there's that lag of things are just not matched. Mikhail, by the way, I mean, you don't need to apply for any contests. I would have just FaceTimed you anyways. Mr. Dennis, opener, yes, those Excel sheets, you can get them, 100%. Okay, Nick Patel, trade ID is only $15 if you have a Scott trade account, so that's not so bad. That's pretty good. Chip Johnston, how you doing, brother? Chip, so Chip's mentioning he's in a previous boot camp student. He's been making the $200 a day quite regularly, so good job on a small account. So he wants to know, like, how do you grow it versus managing your other stuff. So kind of how I would think about it is you got to pay yourself once in a while to make it real. When you don't pay yourself some profits, it becomes like a big video game. So I'd say, like, pay yourself half and keep half in the account to grow, right? Because you need to grow the account to essentially get to bigger spots anyways, and then pay half, save it, pay off debt, do whatever. But, always pay yourself a little. Maybe you pay yourself a third or a half or whatever. Pay yourself something, because I've had those periods in my life where I just leave the money in the account, or I'm just trading to trade, and it just becomes a video game, right? It's not real. You need to feel that money. You need to go out and spend it. You got to give it away. Do whatever you have to. You've got to feel it. Leanne, I haven't tried it on the long side. I've noticed the stocks, when they break under VWAP, sometimes they break above, but it's not the same as the Fizzler. Hey, Mr. Rob Byer, how you doing, bro? By the way, can you touch on the alternative tick rule and how to short around it? So, alternative tick rule, the uptick rule means basically you can't short the bid. So anytime you see a stock basing at lows, don't try to break that thing down, because they just squeeze it up and everybody gets stopped out because you can't short the bid. So you want to be hitting those things into spikes, like into your EMAs and stuff. And then you'll see the patterns collapse even faster. So it can work in your favor. Hey, Marin, what do you think of the Sally Gator indicator? I've actually never heard of that one. Shit. You stumped me. Let me see if I can find it. Saligator. I don't think I have it. I don't got it, Merritt. Hey, Edwin, what's up? Volume doesn't matter right on display. In terms of liquidity, it matters, but not like at the moment it's breaking down. No. Hey, Mike, how you doing? So Mike says, what about VWAP long, not short? So I have a whole host of long VWAP plays, but they look a little bit different. They're not fizzles. They're more breakout pullbacks. So I do have, I have a whole host of long VWAP plays also, yes. You can use VWAP to long side. Hey Edwin, how you doing? Just the earnings plays the only swing play? No, I mean I have a whole host of swing plays I use, but for the parameters of this particular type of webinar on building accounts, I was trying to focus on one swing, 1 day trade. But yeah, I mean I have 10 swing setups I know. The hours of classes at night are 8 p.m. Eastern time. I'm sorry, I'm on Central. Mr. Nakashima, what's up, baby? Oh, man, I did have it right. 3-day trades are okay, but 4 or more or not. My bad. Alejandro, I did not know you were a builder. What's up? I'm in TD Ameritrade at the moment. They've recently decreased their commission to $6.95. If you go flat, ask them for $5. They'll probably do it. If you want to go per share commission, ask for 50 cents per 100 shares. Since you have a smaller account, they'll probably, they won't give you the best rate, but as you start trading with them, they'll keep asking them every couple months to lower it. Joe Scavarelli, good to see you, brother. Yeah, the webinar will be recorded. Hey, Scott, what's going on? Scott says that during the pre-market, when you're determining whether to long or short, do you ever look at the dark pool activity on the SPY, TVIX, VIX, or UVXY? No, I don't. I try to keep things real simple. I trade the patterns. I go with general trends in the market. And then I always keep a couple, what we call the double Lutsies. If the market does something opposite of what I thought was going to happen, I have these stocks ready to go on the opposite side. Hey, Mr. Hester, appreciate it. Ruben, when is your next free chat day? Maybe a couple months. Hey, Mandy, man, that's like a frigging 13-point. That's like a 13-point question. Just FaceTime me tomorrow. Lunch, maybe. Hey, Robert, man, I appreciate it. How well would your strategies work for options? I have some friends that trade weekly options, so they use the charts, but then they match it with the weekly options. That's not really my kind of, I just don't understand options that well. Alejandro, I will. I'll announce it when I get the dates. I'm supposed to be in Europe all summer, so I'm trying to figure out what to do. What is your VWAP strategy? How does your VWAP strategy work for longs? Liam, so I've got like some breakout pullback plays. I've got remount, a VWAP remount that I also use. And then I have a flag based on the VWAP. Hey, Mr. Furlano, appreciate it. I will try my best. Hey, DNT, yeah, the course starts at 8 p.m. at night. Everything is recorded archive. So, you'll be able to go and, you'll have lifetime access to this stuff. So you'll be able to watch it later on. Brian Taylor, how you doing, bro? I use daily charts for my swing trades. Hey, guy, how you doing? Is 25 to 30 cents too tight? It depends on the stock, right? If it's a $1 stock, no. If it's a $200 stock, yeah. Hey, Heldo, do you trade stocks below $10? I do sometimes. It's not, I don't hunt them. I don't hunt any type of stock. I'm looking more for movement and momentum. Hey, Donald, what are your thoughts about using SureTrader for bypassing PDT? I personally haven't used them, so I don't know. I mean, sometimes you just got to try some things out and test it out, get a demo, and see if it works for you. What with an hour a day trading? Hey, Ankit, what's going on? With an hour of day to trade, what kind of setups can I use? Really any swing trading setup, because it does not have to be something you monitor all day. Use text message alerts, email alerts to kind of keep track of stuff, and you'll be good to go. Whoa, Slovenians. I like it, Alice. Hey, Bobby. Our intro course is probably like, I don't even know, 4, 6, 7 hours. It goes into a couple basic patterns. It's a beginner's course. Have you thought about using buy stops, enter flags? No. I just feel like I would not be able to catch them. I don't know. Hey, Charles, what kind of spreads are too big for beginners? It depends on what you can handle, but sometimes even when you get above 5 cents, things can get a little bit tricky. Hey, Merritt, do you use level 2 in time of sales? So I have level 2 boxes on my platform and all that. So, you're inherently using level 2, but I don't have a specific strategy of like, I'm reading the level 2 to catch these bids. Like, not really. Thanks, B-Rad. You're in good hands with Nate anyways. He's a good friend of mine. What setups are working on the long side? There's a lot of earnings plays out there right now. I mean, you're seeing this kind of a whole host of, you're seeing momentum in semiconductors and a whole host of sectors. There's a lot of trenders out there right now. I mean, holy crap. This whole market has been like, you've been getting these earnings thrusts. Hey, Bronco, I don't have anybody from Serbia. I got a trader that's trading live with me right now from Croatia. Ivo Medanovic. At one time, Serbia and Croatia was together. But I'm sure you already know that. Rolando, how are you able to control 100 shares? Just by buying and selling them. Hey, Kevin, how you doing? So you mentioned that a trader should be able to walk away after locking profits. Do you judge this amount size based on account size or something else? Well, Kevin, I'm using kind of a base parameter to kind of blanket, right, everybody. Of course, if you had $200,000 in your account, you should be able to make 4 or 5,000 every day. You know what I mean? So, of course, there's that scalability factor of things. But in general, I'm talking about more for when you're new. Because like if you're new and you had 500,000, you still wouldn't be able to make $200 a day. It'd be hard to lock it in because most new traders lose, right? So the point was to kind of just start winning and start building small and get that thing up. Shelly, best Canadian broker? I'm not sure. I've got a lot of students that use interactive brokers and they seem to like it. Hey, Brian S., how you doing? How do you determine when to buy a stock midday? The midday is like the worst time to trade. I particularly just use VWAP pullbacks or remounts or like 1, 2, 3 patterns. But I very rarely trade midday. I try to get out of here by the morning. Midday tends to be choppy, so you got to get deeper pullbacks. At the open, you can get smaller flags. Midday, because it's longer in the day, you need deeper pullbacks. Giovanni, yeah, we have payment plans on the boot camp. Yep. Hey, Bobby, 4% breakouts are not the same as gappers now. Gappers are stocks that are actually breaking out pre-market, so they're gapping up on earnings. 4% breakouts to scan I run at night just to see what moved that day. Hey, Roberto, try to look for inflection points on the stocks. So like kind of that mix where you're anticipating, but you're not chasing it up, but you're getting it right at that sweet spot. So you got to get in the right stocks and then make sure you look for those inflection points. NYC Trader, yes. Sazaman's one of my business partners. He's been with me for, holy crap, 6, 7 years. I trade with him on G-Chat all day, and yeah, he moderates the chat room. Mr. Sawson, what do you mean by what logic do you use? If you can just give me some details. Hey, Ruben, how you doing? What advice you get on opening account with brokers? In life, you get what you pay for, right? If you have a couple $1,000, you don't have as many options as the guy with $2 million. That's just a sad part of life. You know, you don't get as good a service. Sometimes you just got to do what you got to do. So, you know, you can test it out, get a demo, see if you like it, and, you know, just make sure that you don't go overboard. Should a newbie wait a certain amount of minutes before trading each day? Mr. Guy, it depends if you can handle it. If you lose at the open, then don't trade the open. If you only win at the open, then obviously you want to trade at the open. So, you know, kind of trade or stay away from your weaknesses. Hey, Corey, what's up, baby? Mr. Wilson. I mean, 9 EMA is an indicator. I don't base any strategy around it, right? It's just one piece of a small puzzle. So, you know, it's just what I know. I don't know if it has a higher percentage than a 450 indicator. Nobody knows, right? You know, you do what works. Hey, Corey, who ran? Yeah, there will be a replay. Guys, in our boot camp, there is both day trading and swing trading. Yes. So we have 5 swing trading classes. So we spend equal time. If you don't know how to swing trade, it's going to be hard to day trade. Your best day trade ideas happen from stuff that's happening on the big picture of a stock. So you've got to know how to do both. Hey, Brian, so something like GES, you know, if the SSR is on it and it's a retail stocks suck to trade. Always remember that. If the SSR is on it, you often do get kind of a spike at the open and then wait for like a trend line break and kind of short the roll over. Oh, Dave from Pyongyang. Is that fucking North Korea? Yes! This is my first. Oh, Japan. What a tease. Man. Hey, Grundy from Norway. What's up, brother? So typically, I'd like to enter it as it's breaking under the VWAP, but the 9 EMA converts on it. What's going on in Norway? I got one student from Finland, Henrik, and another one, Simon, from Sweden. But Norway's empty. You could be my guy. Buy small to test and set up. Charles, have you ever scaled up, meaning buy small to test to set up, and I'm losing my voice. Buy bigger when it's confirmed? Yeah. Hey, by the way, Mr. Pyongyang, I use full stochastics, 533s. Pranil, good question. Pranil said, do you ever anticipate a breakout so the RR is better? Yes. I actually tend to anticipate more breakouts than I buy in confirmation because it's closer to my support. Ellis, how do you trade 1 minute breakout scalping? Yeah, I mean, sometimes I can whip out a 1 minute. It's not my, go-to, but it's something I can use at the open or for specific types of scalps. You can use it. Edwin, how do you use VWAP and 9 EMA to go long? Well, you can buy it on the first pullback. So like you can have these thrusts and then pullbacks of the 9. So, see this? Thrust, pullback, and then go. So you can use it as a way to generate your flags and stuff. You can use it in many similar ways. You can use it in a whole host of ways. Is there a site to use the ETFs? Mr. Casius, yeah, if you Google it, there's like 100 sites like that. Let's see. Yeah, I mean, they have lists, they have ETFs for everything, Mr. Casius. Hey, Joe, man, good to see you, brother. I have 200,000 in a pinch account. Fund a trading business? No. No. Your retirement is your retirement, guys. That's the money that you need to retire. Don't be bleeding out your retirement accounts to fund a business, right? Save money, get a second job, start small. Your retirements are your retirements. That's sacred money, in my personal opinion. Now, everybody has certain things that they believe in and they do. I mean, we've all heard stories of business owners taking mortgages out to fund their business and stuff, but there's other ways to get into this game, right? Go out, save 5, 10 grand, start small, and get into it, and then build your account to get to that point. Your retirement is sacred stuff. Your wife will kill you. Hey, Rolando, I prefer TC2000 over Medved Trader. I mean, they both have their own kind of things that they're good with. I like the way Medved Trader's watch list, like the watch list itself looks. Plus, I have an Ameritrade account for my swing, so I trade on my Ameritrade through Medved, which is why I have it up. Hey, Nitin Sony, if you missed the webinar, I'll have the replay out. I'm not sure if I understand your question. The whole webinar was about it. It's not a one-word answer. And feel free to email me with any questions or whatever. I'll get to you. I got you, brother. Us brown people, we got to stick together in today's world. Hey, Josh, do you recommend Windows over Mac? My desktop's Windows. My work computer, like where I run the business and stuff, is Mac. I just like Macs better, but a lot of my trading platforms and stuff, they only work on Windows. Hey, Fod, how you doing? Dude, Fod's saying that, he's awake at 5:30 and the market opens at 9. So he's always tired. Fod, I try to learn how to trade the first couple hours of the market. That way you're not open to like, up till 3, 4 in the morning, but you're just trading like 9 to 11 or something like that. Hey, Leanne, I don't reverse the fizzle for VWAP longs. I haven't found that particular setup to show itself. I'd rather do breakout pullbacks or remounts or some type of flag or congestion pattern around it. What is the most common setup that can be used during the market open? Matt, you don't want to go with the most common stuff. If everybody's doing it, then right, you might be the last man to the gangbang. Did I say that? I use ORBs and quick pullbacks. Haldo, what do you think about the Ichimuchu cloud? Ichimuguchu. I don't know. I haven't used the I'm sorry. I haven't used the Ichimuchu cloud before. My uncle actually in our chapter, my Uncle Matesh, he uses the cloud. He's always talked about it, but I've not been able to wrap my head around it. Why do you prefer stochastics over RSI? Bobby, RSI is not actually something that's really used for overbought, oversold. RSI stands for Relative Strength Index. So what it measures is the relative strength of a stock in comparison to a group of stocks or an index. It's not really used for overbought, oversold. Hey, Brian, I don't have that many haters, man. I don't know if I need to make a YouTube video about it. Do I? Man, shit. Maybe you're seeing more than I do. I could if I start getting a lot of them. Do you use average true range to use stop or profit? No. But I could. I just, I already know. I can make that in my brain. Hey, Brian, do you use hotkeys? I don't. I have my platform set up so everything is just like a couple buttons. Hey, Tom. Tom's asking about like what's the difference between stocks and futures. I like stocks because of the game, right? There's 8,000 stocks trying to hunt for the best one, and there's an edge in that, right? Of finding the one that could go up versus everybody's just looking at the same stock and then trading the same levels. I don't know. There's just something about that I was never able to wrap my head around. I have a lot of professional trader friends that trade futures, and they love it. The problem I feel with futures sometimes is the leverage. People get into futures because of the lack of pattern day trade rule and the leverage, and it's easy to get creamed because you're using the leverage, right? And so I think sometimes maybe tone down the leverage a little bit till you get used to things. Stronger level of support or resistance, VWAP or 9 EMA. It depends on the time of day and also the type of stock. Hey, Francis, all of this stuff will be on video, and I got a couple YouTube videos on how to set it all up too. Or email me. It's just take 30 minutes. I gotta make sure I get to everybody's questions. I'll definitely help you out with it if you're having trouble with it. Hey, Michael Anderson, E-Trade probably has a simulator on it, so you could probably get E-Trade to look like TC2000 and mimic it and do all the stuff that you need to on it. Edwin, what makes a stock hot? If it goes up a lot. For me, that's what makes a stock hot. If it explodes, it's hot. If it sits there, it's not. Pablo, Pablo, what's up, baby? What other brokers do you recommend? So Pablo's asking about different brokers. Uh, a lot of people use interactive brokers. You may have some Chilean brokers. There's Speed Trader. They're pretty good. Um, the biggest are Ameritrade, E-Trade. It really depends on the tools you need and also the commission you can negotiate. Remember, you can always negotiate them. You need that per share. You need that low price, and you're going to be good to go. Bobby from Indiana, baby, what's up? X is just U.S. Steel. I traded back and forth, though not necessarily just to anything in particular. I trade the patterns on it. So like if it's a breakout, I may trade the upside, breakout, upside, breakout. So I'm doing different patterns, and then on a day trade basis, I can trade within the patterns if it's drifting lower or higher. I like it because it's a liquid stock and it's got a nice range. You can add a lot of shares to it, and it'll give you a good range. Christopher Orr, how you doing? Do you consider pivot points while day trading? No. I've seen some people use them, the R1, R2, S1, S2. I already have enough support and resistance levels when I'm looking at stuff to think I've got where I need to go. So I don't need to supplement it, but I've seen some people use it, and it can be useful. Hey, Melly, how you doing? When swing trading, what's an appropriate time frame to be able to see clean charts? You can go back out like 6-month daily charts. You should be able to see good stuff on there. David, any tips on psychology when you're on a trade? Trade your plan. If you trade your plan, write it down, trade it. That's it. At that point, if you can't stick to your own plan, your life is in shambles anyways, right? It's your plan. You wrote it down. Fucking stick to it, right? Because if you can't, then like, okay, I shouldn't be trading right now, and that's a good thing. You can walk away, you can step away, and hey, not everybody's meant to be a trader, right? In life, we have to do what we're supposed to do. Look, I break my rules all the time, and you know what happens every time I do it? Pay the price. It stinks. So we got to do it. So write it down. Stick to it, verbalize it, say it out loud. Like, this is my plan. This is what I'm going to do with it, right? Just put it out in the universe. Oh, Brian Riddle. Yeah, you're right. That's probably, well, I'll always have a few, but you're right. Maybe I got to. Adrian, do you have any parameters for your VWAP? My VWAP is just like a regular VWAP. There's not a parameter on it. Why do I trust it so much? I don't trust it any more than anything else. I was trying to teach one setup. I have 18 setups, so it's one of many, but it's something I just found is working right now. And if it's working, I trust it. When it stops working, it's out. I adapt. Hey, Wander, what's up, baby? Use VWAP on the 1-minute chart. Well, VWAP, no matter what chart time frame you're looking at, it's going to be the same because volume-weighted average price has nothing to do with candles. How do you use stochastic indicators to make money? Corey, I don't use it as anything for buying and selling entries. It's just a confirming indicator. Are you mostly short trading? Hey, I'm pretty 50-50. Hey, Katira, remember, and I'll have this up for replay too, is you want the 9 EMA curler right on top of it. And Corey, like, for example, Corey, brother, right, like, so say you got a stock that's like extended. Say you got a stock that's extended, so it's like got overbought stochastics or something. It's ran from like 5 to 8, so it's up 60, 70%. So then when it snaps into resistance and it's overbought, right, you could take it back down the other way. And same thing for oversold. You know, you have a stock that's really oversold and you have a pattern based around it. Now you have some additional confirmation. Hey, Brandon, VWAP Fizzle is not a swing trade setup. It is just for day trades. Hey, Efren, how you doing? Efren is mentioning at what levels do I want to start taking profits? He uses 3%, 5%, 8%. Well, Efren, it depends on whether you're swing trading or day trading. You'll have different kind of a system of selling. And I don't use percentages. I look for reasons to sell. I look at the chart for reasons of when to get out of a stock. Like I don't want to sell at 3% if I could get 30%, right? So I want to let the chart dictate when I'm getting out. Hey, Miguel, when do you enter flags? The down trend line is not a clear indicator for me. Well, Miguel, the trend line is just one piece of the action. You know, I'm always looking for apex points. Stocks, inflection points where a stock is ready to start bubbling. You know, you could have a trend line on a stock, and sometimes they pop and then they come back, and then you got to redraw the trend line. You know, and so you've got to look at also the time of day, okay? You know, at the open, you can have shorter flags with different type of trend lines and velocity of them compared to what you would look at the middle of the day. In the end of the day, you need a completely different type of flag and trend line. So you've got to remember that the longer the time frame goes, the longer your pattern will be. Hey, Trevin, yeah, I mean, I short a lot. I mean, right now, like 65% of my good trades are from shorting. So yeah, I love shorting. I go, you know, green to reds, rubber bands, VWAP fizzlers, just one aspect of things, breakdown pullbacks, you know, the works. Hey, Ramon, I got your email. I will make sure. I'll make sure to get you, brother. Hey, Melly, yeah, I'll get the webinar out. Ideal volume for my picks of at least 1 million shares. Hey, Dennis, I sometimes trade gold ETFs, like, you know, I use Dust or JNUG. I'm just trading the patterns. I'm not necessarily even trading gold. Like, I'm just trading the ticker, just like I would anything else. It has not necessarily like, okay, it's gold, so I got to do this, or I believe this is going to happen. I'm just trading what I see. Harman, what's up, baby? How do you know when to buy a stock before it booms? Well, that's has to do with the pattern, the market conditions, the time of day you buy it, and also does your specific type of entry actually match with the type of pattern you're doing? Hey, Harman, how do you manage risk on swings in terms of potential gaps outside your designated stop? I'll usually wait about 15 minutes. So if a stock gaps, I'll let it gap, and then as long as it doesn't break that opening morning low, I'll let it come back. Because sometimes they go red to green. Do you often trade stocks below $5? Do you suggest trading low-cost shares with low capital? Sometimes if there's a hot run on lower price stocks, I will trade them. mean, there's nothing wrong with them. It just depends on what's running. Hey, Mr. Tazanis, Peter, how you doing? I haven't used that broker before, so I don't know. Most of my students, they just trade inside the fund. So I haven't had to deal with any of the outside kind of Bahamas brokers before, but I haven't heard anything too negative. Sometimes you just got to give it a whirl. I don't know. J. Urban, what are the prereqs for stock to be on your watch list? Range, volume, daily chart breakout, ideally under 100 million in float. Some type of catalyst would be nice. Corey Horan, if you have a smaller account, you can still scale out as long as you're in a per share broker. Mr. Vespa, how you doing, Phil? What's up, baby? Long time no see. How do you break the pattern of stubbornness and take a small loss before it turns to a big loss? Use hard stops. Use hard stops. And also, give your daily P&L, your brokerage statement, to your wife to observe so that she knows whenever you get stubborn and turn your small loss into a big loss. She'll smack it right out of you. I have a student that's doing that right now. It changed his life. Now he gets beat up by his wife, but he doesn't gamble. Hey, Ryan Ledoux, what's up, baby? Yeah, boot camp takes time. I mean, you're going to talk about 10 hours a week at least, right? Hey, King, what I mean, Mr. King Satterwhite, how you doing, sir? What I mean by income trade is, sometimes like a big trade is not there. You're going to take a quick 50 cents, $1, just quicker trade to nail like $100, $200. Just take that quick money because there's not anything huge happening. Do you much pay attention to the trends of the overall market throughout the day? And if you do, which do you focus on more? I look at the overall picture of the market, and if there's a lot of volatility in the market, then I'll zone in on like a smaller 30-minute type chart to see the levels. But if the market's just in full-blown berserker upside, Trump style, Trump nation, bull market, or whatever is happening of recent, I just ignore the market and just go because everything's running. Hey, Tim, I do use Windows on TC does on my Mac also. You got to use like version 12.55, something like that. There's like one version that's like that you could download for the Mac. They haven't updated it. Hey, Mr. Furlano, I don't have the gap scan for that. I've been using Trade Ideas. I've heard there is one, but I have not. Nobody's sent it to me yet. I'm going to put that on my to-do list to find. Thank you. Good. Do you use weekly charts in your swing trading? No, I don't hold long enough for them. How important is volume in confirming a breakout intraday or swing trading? Volume is the second most important thing on our chart after price. Hey, Alexander, our intraday trading course has probably 3 or 4 patterns. So it's just a shorter class. You're going from 60-hour class to like 4 or 5 hours. But yeah, there's some stuff in there. Hey, Pablo, Interactive Brokers has really good shorts and the commissions are fairly cheap. I have some students that trade there. Hey, Ruben, you got to use a little bit of margin, brother. You got to use a little bit of margin. Guys, it's a misnomer to think that only penny stocks can grow accounts. Okay? If you have a $2 stock and it moves around like 5, 10 cents, you have to be picture perfect. It's easier to day trade a stock that's 30 bucks and goes at 33 and then back to 31 and up to 35 and it's got that range. You could take 100 shares and trade around that range. You take $2 here, $1 here, 150 there, and you're adding up those gains. And before you know it, you've had a good, you've had a good week. Hey, Corey, I'm just taking all the names from the webinar, so I'll email everybody in the morning. Hey, Ethan, how many strategies do you use in your trading? I have 18 patterns I trade in boot camp or teach in boot camp, so I have a few. Hey, Mr. Patel, thank you. I will get that from you. Mr. Bonilla, no, I don't use FinViz. Hey, John, I have it for my bootcamp students. The setups pages, it's in the bootcamp module page. You go just scroll down and it'll be there. Hey, Chris Keen, thank you. Appreciate it. Mr. KCS, how you doing, sir? Do you use EMAs or SMAs? Both. We use SMAs on the daily and EMAs more on intraday. Trevin, I use 13 EMA from Cameron. Cameron's got his own system. So, I haven't tried the 13 EMA. Dun, 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 dun. Hey, Mr. Cullen, boot camp is, I believe the early bird pricing is 2,300. Hey, Ruben, I haven't used Robinhood before. And the other question, I don't trade pre-market or aftermarket. Hey, Brad, I did not play the shippers today. I saw some of them running, but, not my, this one looked like it had some juice. You can't really short these things too early. So it's like, you got to wait a little bit. One of my students has been playing this one, but I did not participate today. Oh man, Roberto, I may have to take you up on that. Let me put a note to make sure I email you if I make it out. So, cool. Hey, Alice, exponential is different than VWAP. You got to add them both. Hey, thanks, Mr. Hester. Appreciate it. Hey, Jennifer, I really appreciate it. Thank you. Dominic, there's not a good percentage necessarily on a trade. You want to cover your risk. So, like, if your risk is $1, you want to try to at least make 2 or 3. But the main things you need to sell when you're supposed to sell, right? When the momentum is at. Mr. Casius, you got to go into all the scans we learn in boot camp, sir. That's not a one-word answer. 4% breakouts, gappers, go to stock list. Just go through, the gamut. And then look always for range. Hey, Chris, I don't delve into international markets, only U.S. Hey, Jessica, how you doing? When you're not feeling like super financially stable, stay out of the market for a little bit, right? Just watch, learn. It's easier to lose money when you're feeling stressed. I've had it so many times in my life where it's like you're stressed out, so you got to make money, so you force the issue, and things just turn apart. Take a breath, observe, and you'll be good to go, right? Take your time on this. Hey, James, yeah, we do have a swing trading service. Hey, Jessica, Greenville, South Carolina. You know what? I got a student, Billy Aycock, that's got a 803 area code. That's got to be close to you, right? I've got students in Columbia. I got Billy. I forgot where Billy's from. He's got 803 area code. He's coming to my house in a couple weeks. I'll have to catch up with him and ask him. He's a pretty sharp guy. He actually is a home builder or something. Pretty cool dude. Hey, Donald, your goal is to make $100 a day. You're talking about, you're getting ahead of yourself, I guess. I'd be happy if you learned to get profitable, then to go 100, then to go 200, then 500. I mean, you're talking about a very, very long road. Like I said, Jake, he came to my house, he's making 100. Next year he's making like 4 or 5. The next year he got to 1,000. It slowly kind of happens. It's very rare you see somebody go 0 to hero. Hey, Mr. Mars, Daniel, thank you. Hey, James Cullen, I have some variations of head and shoulder patterns, but not that specific one. Hey, Corey, what puzzle? Can I have something in the background? Hey, Roy, I'll get it to you, brother, the webinar recording. Hey, Steve, TC2000, I don't trade from their brokerage. I have my own platform I trade off. They have their own brokerage, but I do not trade off them. I think they're new and their rates are not that good. Hey, pretty. I sometimes go 1 minute if there's like a small cap stock or something that's really flying around at the open, but it caused me more losses than it has gains. Hey, Mr. Conley. I hopefully I'll be able to see you soon then. Hey, B-Rad, market cycles, all that accumulation phase, distribution phase, run-up phase, run-down. We cover all that kind of stuff in boot camp. On your other question, how to buy stocks with a bigger spread? Yeah, like I'll buy in between the bid and ask, or I'll wait till the spread tightens a little bit. You have to play a little game with it. You've got to layer into it too. Like, don't try to buy all your shares at once. You might have to go 100, 100, 100. Hey, Mr. Renking, how you doing? Question is, with swing trades, how do you handle topping tails if you haven't actually triggered your stop? I tend to just set my stop and forget it. I'm trying not to read too much into it. Hey, Bobby, a remount is like when a stock breaks under a particular area. Maybe it's a key moving average or something. It breaks under, flushes everybody out, and then it remounts back over it. Hey, Nia. I have not been in trading. I've been the last man to the GB, but not in real life. Alexander, I'll try to get the replay of the webinar up in the next week or two. Hey, Riaz, what's going on? Riaz Khan, consistency, so much of that is going to depend on you too, because, like, for example, I could have 50 people in class, 20 of them will treat it like a gym membership, right? Where they kind of come and go. 20 of them, they'll be serious for the first few weeks. Then they kind of, just like everything in life, right? People kind of lose steam. Then they do it, and then they don't. And then you'll have like a handful of people that are just in it, right? And they're in it to win it, and they're at it, right? And so, sometimes the consistency of your preparation, your intensity, that will also impact it. There are things that I can't foresee, right? They're variables of what's going on in your personal life, how much your work impacts in terms of, like, time. Maybe you're really busy, right? Maybe you're out saving lives or fighting crime. So there's that aspect of things that I have very little control over. The only thing I can do at times is, provide support, throw in the best class I can, and make sure that I'm always giving good advice. And sometimes that's enough, and sometimes it's not. Hey, Steve, yeah, we do have a package, Mr. Schwartz, for swing alerts and the trade room, I think. I don't know. I'm so sorry. I feel really stupid for even saying that. There's probably something. If not, just email me. I'll make sure to get it done. Where's my email? Okay, just email me. We'll get it done. Hey, Mirna, simulators like paper trading, There are replay functions too now, replay simulators, where like say you wanted to practice a setup, you can rewind the day to XYZ and look for all the momentum stocks of that day, and then sit there and trade out those days. So you can rewind the clock like 6 months, 8 months, 12 months, whatever, and rewind that day and start looking for and hunting and trading those specific patterns. So you'll have replay simulators also that you can. I know there's one out there, Trading Sim, and then you used to think you're swim one on demand. Hey, Ronald, do you always wait for pullback to 9 EMA or VWAP? No, it was just in that one specific instance. So like this would be an ORB, you know, or like the example I used, brother, Mikhail, it's when you have a range at the open, like so you get a little bit of a gap up, and then you have this range right at the open. So it's like the first half hour, and when you take it out, right, you're playing for that quick scalp. Ideally, when you take it to the 9 EMA, it'll be fairly close to you can manage your risk on it. Hey, Corey, I would totally do it once, you know, you got to have some skills, though. I can't just, there's a million people in the chat room all day only trade small caps, but I banned them. I'll have them back. I banned a couple of guys, but I'll have them come back and give me some company. Actually, I let him back in yesterday. I don't know why he's still not back in. I'll have to message him. Yeah, Roy, I know I'm behind on emails. I'm awful. Hey, Pedro, what's up, baby? Where can I find good stock picks? Make your own scans, right? You know, you can use Finviz, TC 2000, you know, anything like that. You know, you need good stock picks, or you need stocks that fit what you're trying to do. My hold times on swing trades can be between 3 to 14 days. I think I'm from a million accounts like that, and I've never heard the saying that you can only do it with $1 stocks. I'm not sure. I'm not sure where you got that advice. What? Oh, Rolando's in Greenville, South Carolina. Rolando, you'll have to email me. I'll introduce you to Jessica Perry. Hey, Mr. Guy. Thank you. Anybody else have questions? All right. You guys are weak sauce today. I'll get it up in a couple weeks or week. I'm lazy. This will take forever to encode. All right, speak now and forever hold some peace. Lost. I tried an 84.5. Going twice. Stay love you, muchachos. Peace. Friends, I appreciate it. Guys, it's been the real deal here. Peace.